Hey guys, how is everybody doing? Just wanted to come here and give everybody a quick welcome, quick shout out. Where's this camera thing? All right. So my name's Rodrigo, guys. We're gonna start here in like 45 minutes. I just wanted to come here, say hello. There's a couple of you guys in the chat. I don't want you guys to get bored or whatever. So we're just gonna put some tunes here in the meantime. But remember, make sure you're here in 45 minutes, 1 p.m. Eastern. We're gonna be talking with Chief Market Strategist Matt Maley and Jay Powell, special guest. You wish, right? But we are going to have Matt Maley here. We're going to talk about the Fed. We're going to talk about inflation, everything that's happening right now in the markets. A lot of you guys have probably already seen Matt and his trades. You know, he's whipping out these daily, day trading options, right? You know, calls and puts on both sides. So today we're going to make a couple calls. We're going to be talking about a few trades we have on already in the chat room. A lot of important things, right? And we're going to digest everything that's happened throughout the weekend. So just make sure that you're here when we start. 44 minutes. That's when we're going to get everything going. And if you want to hang out in the meantime, feel free to talk in the chat, whatever. We're going to get started at 1 p.m. Eastern. Just make sure you're here at that time. Pen, paper, and the right energy, because we're going to have a good session here, folks. So that wraps it up here. We're going to start in 45 minutes. We'll see you guys here. Back to sitting here in the back. I'll be waiting for Matt here. I have a quick call with him before we get started, but we're going to get started here in about 40 minutes or so, gentlemen.
I'm letting the dark. It's time to tie you up, baby. It's time.
Hey, what's up, everybody? Just wanted to come in here and check the temperature, see how everybody's doing in the chat. We're going to be starting here in about, um, the timer went away. Okay, 20 minutes. So in 20 minutes, we're going to get started here with Chief Market Strategist Matt Maley. A lot of you guys know him from CNBC or Bloomberg. He's always out there, a lot of, either there or from the Stock Picks Inner Circle chat room, where he's pretty much trading the whole day, Monday to Friday. So he's going to be here with us today at 1 p.m. Eastern. We're going to get this thing started. We might go for 1-2 hours. I really don't know. It depends, Matt, on his time. But we're going to be talking about trade ideas, setups, a couple of trades that we've made and trades that we have on in the chat room right now with Matt. So also we're going to talk, we're going to take tickers at the end. So make sure to leave those at the end. But any questions, put it in the chat, guys. But again, we're going to start 20 minutes. So stick around. Just make sure you're here when we get started, about 1 p.m. Eastern. All right, ladies and gentlemen, I'm going to start here a couple minutes earlier here just because it's, Sunday and we have a lot to cover here. So welcome to the session. My name's Rodrigo. I'll be here with you today and we'll be with Chief Market Strategist Matt Maley. He's a Chief Market Strategist at Miller Tabak on the analyst side. He's 40 years on Wall Street. He's been at Solomon Brothers, right? Merrill Lynch and more, currently Chief Market Strategist at Merrill Lynch. I'm sorry, at Miller Tabak. A lot of you guys already know him from the Stock Picks Inner Circle chat room, or you know him from the from CNBC, Bloomberg interviews that he does, Yahoo Finance, all around there. But he does have a live trading room here with us, and he does cover a lot of things. Today, we were lucky enough to get him on a Sunday, which is like almost never for Matt Maley. So he's going to be here with us today. Shout out to all you guys that are here early. Let's go ahead and in the chat, let me know when you guys are ready to start. But those are the things that we're going to be covering today. Leave your tickers until the end. And let's go ahead and bring on the man himself, Matt Maley. Let's go.
Hey, Rodrigo, how are you? Excuse me.
Hey, how are we doing there, Mr. Maley?
Good. Can you see me okay? I'm not sure how it looks like we're all set. Okay, good. Good. It's been an exciting time in the markets, needless to say. It's been a rough time for, I think, for a lot of people, of course, but it's been a good run for us here in the Inner Circle chat room and some of our other stock picks newsletters and things. We've caught this bear market. We knew it was coming. We saw it coming and have been able to profit from it nicely. And it's going to be really interesting how things go forward. I think this volatility is going to stay with us for a while. And next week's going to be incredibly interesting because it's funny. I've talked about, we talked on Friday, Rodrigo was talking about how, this market really still looks quite dicey. But doing a little bit more studies yesterday, quite a bit actually, we could be setting up for a bit of a bounce. Now we have to see how the market takes shape on Monday, but I will show you today a bunch of different charts that are charts that we've seen in the past that have been followed by a bounce. Now I think it's only going to be a short-term bounce, but it's something that a lot of people on Wall Street were looking for 2.5 weeks ago, and even I was saying that we could have a bounce there. I wasn't looking for a 10% bounce that all these other people were looking for, and a lot of other people were looking for the low, and of course they were dead wrong. I think we'll cover as to why I think we still have a lot of work to do on the downside before this market finishes up. But the next week's going to be a very interesting one, especially. As we move, we're going to be very nimble. And we want to be able to take advantage of it, just like we did last week. Literally, as we got into the end of the day on Friday, we had a tough couple of days. We made some money on some trades. Some other trades didn't work out so well, but I was very confident that we were going to get a late day rally, and we made that call, and we were able to make a bet on the bullish side. And we made, depending on the trade you made anywhere from 200, 2 or 3 times your money, to as much as 10 times your money as one of the people, one subscriber.
David. Yeah, David.
This is an incredibly exciting time. Next week, it's going to be very interesting because next weekend is, of course, Memorial Day weekend. And for whatever reason, that tends to be a bullish week, the days around it. So, I'm not saying the beginning, not the whole week. Some people say Thanksgiving week is usually bullish or whatever. This is just the days surrounding Memorial Day. Nothing's perfect, but again, we want to stay nimble. I've been bearish all year long on both a long-term and intermediate-term basis, and we've made some real nice money with negative bets on the marketplace in the Inner Circle chat room. I made a real lot of money and on certain trades, and we've had. Also made some nice trades to the upside. We have the tools now to trade actively in both directions, and we can do it cheaply. And something we couldn't do at other times when the markets were going through a lot of volatility like they are right now. And again, I think these volatility is going to last a long time. So I'm really excited about today's webinar. There's a lot of things we need to cover, and both on an intermediate long-term basis and on a very short-term basis.
Right. So how is it that you're using this strategy? I was part of some of the trades that you made on the SQQQ. I did about 180%. So, it's not every trade. Not every trade is always like that, like you say, but really, like when the consistency there has been good for me. So, and I think really most of that is due to you've been doing this for 40 years, right? So that's something that you really can't sort of like, uh,
Right. That's,
yeah.
and I've really tried to take a lot of different things together. As you mentioned, I'm the chief market strategist at Miller Tabak, but for the first 25 years of my career, I was a trader on the trading desk at Solomon Brothers, which back in the last 25 years of the last century, back in the 70s, 80s, and 90s, was the premier trading desk on Wall Street. And I wasn't there in the 70s, but I was there for 15 years in the 80s and 90s, and I covered the biggest accounts in the world. I covered the trading desks of the biggest hedge funds in the world, like BlackRock, the biggest mutual funds in the world, like Fidelity, biggest banks, State Street Bank, other money managers, et cetera. And so it would be hedge funds, mutual funds, banks, insurance companies, et cetera. I got to learn what really matters in active trading. The longer term trading. Again, I believe me, I have a tier 1 long-term stock picks newsletter that works very, very, very well. But that's a long-term 3, 5, 10-year time horizon. For those who want to maximize their returns and in trading, which can really work right now, especially because the markets are volatile and we have the tools to do it, we've really been able to maximize those returns. And like I said, as a former trader, the theoretical stuff that most strategists on Wall Street, of course, most of them have been dead wrong this year. But all the way down, they've been saying the market's going to bounce. The market's going to bounce. One or two, Mike Wilson at Morgan Stanley has been bearish this year and done very, very well. But very few have made those kind of calls like I've been able to make, and Mike Wilson been able to make. It's worked out really well. But again, having not just looking about the theoretical things, what should happen. I looked at what does happen. I don't look at just the fundamentals. We have to look beyond the fundamentals, and fundamentals are very important. But I look at technical analysis. I look at positioning. I look at sentiment readings. And be honest with you, I use my experience of 25 years on a trading desk. And after that 25 years, I've been trading for the last 15 as well. So it's not like I don't trade with the institutions anymore, but I had to up until just a few years ago. And obviously I'm trading now, but not with those institutions anymore. But the point is that I have that experience to know what's really going on. Because if we don't care that if the stock, when you're trading, you don't care that the stock looks really great long term if the short term picture is a negative one. And that's why we've been able to make some trades in both directions. Now let's just go right to it. I'll see if I can share my screen here a little bit. And Rodrigo, you can share my screen. I'll show you. Perfect. And I'm just going to show you some of the things we've been able to do just recently. Here we go. Right to it here. Oops. Okay, we're going to talk about. Okay, I just want to make sure I got it. Okay, good. Okay. Bang. Bang. Okay. Now this. Okay, I'm sorry. Let me blow it up for you so you can see it much better. This is what we did on Friday. We came in, actually started on Thursday. Thursday, of course, you can see down here it says May 19th, 2022. So this is the last 2 days of last week. We came in at the end of the day in the SQQQ calls. Okay, right at the end of the day. And bought. And again, when I do trades in this in this chat room, I give you very specific things. A lot of newsletter writers, they say, hey, I've done this, I've done that, but they kind of say, hey, buy we're bullish here, we're bearish there. This stock looks good, that stock looks bad, whatever. I come in and tell you the exact trade that I'm doing, and therefore, if I make money, you make money. And on the flip side, if you've lost money, I've lost money too. So, and you get every trade. I don't give half the trades, you get every trade. And I'm not your investment advisor, so I'm not trying to tell you, these are. I'm just telling you what I'm going to do, and then you can make the choice. But the great thing is that it's up to you on what you want to do. Number one, because I don't make any money off you trading. You can trade a lot or a little, doesn't make any difference to me. Okay, I'm just telling you what I'm doing. But we also have people in the chat room who are doing trades different than I'm doing, and I will comment on them. Say, hey, that's a good idea. I'm not going to play it, but you should. But I think it looks like a real good one. Or I'll say, that's not one I really like. Just last week, somebody made 2,000% trading the Target, I'm sorry, the Tenneco, the Target, TGT is the symbol. It used to be Tenneco years ago. But Target, remember last week they reported real lousy earnings. And at least one, I think of several people, people in the chat room made over 2,000%. It wasn't even a trade I did. But here we hit a situation on Friday. Again, I came in SQQQ. I told you exactly the underlying asset that I was looking at in the options market. This happens to be the inverse ETF on the QQQ, which is the ETF for the NASDAQ 100. Of course, it's where all those big tech stocks are. But I was very nervous. The market had not been acting well. We had made a lot of money on the bear side, and I wanted to make another bearish bet. So I did the May 27th, okay, the SQQ, May 27th. So I gave you the underlying asset, the expiration date, the strike price, $62, and of course, whether it's a call or a put. Now, some people, so we came in right at the end of the day, and we bought them just before they closed at a very nice price. By noontime the next day, we took profits at basically 100%. We doubled our money. Now, there are other people in the website who didn't go all the way out. They were willing to take a little bit more risk, so they bought the SQQQ May 20th calls, the ones that expired the next day. And because they didn't go out as far, okay, they were much cheaper options. They made several 100%, not just the 98, just not the 100% that I made on my trade. They made even more. So again, I'm the one I'm telling you what my trades are out there, and you can play around with that. You can make the trade, not make the trade, make a more aggressive trade, make a similar trade, which maybe a little less aggressive, but you have the concrete trades of exactly what I'm doing. So it's like, okay, well, that's really good. And I bid this trade on Thursday. On the very next day, Friday, we made that money. And then later in the day, that same day, so now we've gone here, we see at the bottom, May 22nd, this is Friday, okay? Came in and late in the day, and I said, this market is not going to stay down. I think it's going to go up. And I had a number of different things that I was looking at, a number of different reasons why I looked at that. But that there. Don't know what happened there. Okay, sorry about that. I don't know. Let's see if I can pull this up here. There we go. Sorry about that. What happened later in the day, again, this is the same day. Remember, we sold those options earlier in the day, about noontime, but late in the day, based on a couple of different things and my experience that I've learned for 40 years on Wall Street. It'll be 40 years in November. And I came in and we bought the calls. Again, I gave you the exact call option, the QQQ, May 23rd, the strike price, the expiration date, which is Monday. Okay, only just went out a day and a half, and the exact strike price and the call options. Look what we made by the end of the day, 175%. Now, what we did, we came in and bought some here, right? Bought a little bit more here, and then we bought a little bit more here, all at about the same price within a few pennies. And so as this thing started to break out, now again, there were other people, I think David was on there. I'm guessing he bought the May 20th calls. In other words, the ones that expired that day, more risk involved, nothing wrong with that. And he made 10 times. So he made 1,000 times his money, 10 times his money in one trade in a half an hour. Now again, we don't do this every single day. We don't make these kind of returns every day. But as I will show you, we've had a lot of different trades that have been very, very strong trades. And I'll give you another one right here, because I want to get right into this to show you what we're doing. Then we'll step back, tell you why I think what I'm thinking right now in the overall market and what I'll be looking for next week. But I just really want to get into these trades. Now, I just talked about that. Whoops. Hold on. Already. Okay, that's not what I wanted. Here we go. Okay, now here's the stock market. We're going back last week. Okay, so this is the end of the previous week. Okay, Thursday and Friday, same type of thing came on. The stock market getting hit. We'd actually, I can go back even further. Hold on a second. Here we are right here. Here's on the 11th. This is Monday. Okay, so this is Wednesday the 11th. Okay, we came in here and I was worried about the stock market getting hit. We came in at mid-afternoon, bought the SQQQ, May 13 calls, $55 calls. We made over 100%, and by the opening the next day. We bought these about 2:30 in the afternoon, sold them the next morning in the first half hour of trading for night. Now, I didn't get the exact top. I didn't get the exact bottom. I don't pretend that, anybody who tells you they get the exact top and exact bottom every day, they're lying to you, number one. Number two, somebody says all of their trades work, they're lying to you. All of the 100% of the trades worked for Bernie Madoff. We all know where he ended up. But the whole idea that we try to do, and we have been very successful at, is that keeping the losses to a minimum and letting the wins really run and get some real nice averages. So it's like, I guess my point is, we have a lot more winners on a percentage basis than we have losers, but it's even much more skewed because our winners win so much more than our losers lose. I guess that's the way to put it. And, because and you always have to check things. There are some things where I've lost 100% of my money, but something, I didn't care because I only bet $50. I bet $100. I didn't care. I had a bet on one side for $500 and I had another one on 50. And I was like, I'm making so much money on because I hedged myself. I've made so much money on the one, and that 500, I've made, $2,000. I don't care if I lose $50 because I'll just let that expire worthless. So I guess my point is the number of winners is way more than the number of losers. But most of the time we get out of our losers very quickly, and the ones we just let expire are just ones that we've said right from the start they're going to be very, very small trades, and it really doesn't matter that they expire because they're really being used as hedges anyway. We're using them as insurance, and like anything else, sometimes like most insurance, you don't want to ever have to collect on it, right? You just say, okay, I paid it, and you move on. But here was one again that week where a week and a half ago, so that we made money when the market got hit. Then the next day, okay, I came in here and said the market is getting way, way oversold on Thursday. So at the end of the day, I said we're going to go the other way. Instead of betting against the market, we're going to bet with the market. So we bought the TQQQ calls, which is a bullish bet on the NASDAQ. All right, again, the May 13, $29 calls. We bought them at 3 o'clock on last Thursday. The next morning, we didn't sell them right at the opening. They had a big gain right at the opening. I knew it was going to rally further, and I didn't get the exact high, but we made over 600% in those TQs. So 6 times your money. Okay, 600%. Okay, and okay, there you go. So you look at that. Look at that. I mean, that's just a nice gain. The thing is, it wasn't the only trade we did that day. We also did Apple Computer again on Thursday, May 12th. Just after I made that QQQ trade, I made the Apple trade. Let's buy the calls. I sold those a little early. We only made 400% on those, and some people held along for longer. But again, because we made some real nice money last week. We made real nice money the week before. So remember the first one I talked about were the SQQQs for May 23rd, May 27th, April 13th. So you can see we've made some really nice. Oops, I said here. Yeah. Right.
Those wins are pretty insane. And look, guys, that's what I was telling you earlier. Like I was in Matt's chat room last week and it was insane. Like honestly, like that week. But so there's also a meeting that you have on Tuesdays, Matt. Like I know that it was 30 minutes and we were able to do some things, and now you can pretty much freestyle there all day if you want. But like what's going on with the Tuesday meeting there?
Yeah, I mean, what we've talked about, as you mentioned, Rodrigo, we have this chat room, and it's a scrolling chat room, goes all day long every day. Goes from well, I get on starting about 9 o'clock. A lot of people get on earlier than that. And if there's something that comes out in the morning, really big news or a really important data point, I'll start much earlier than 9 o'clock. Usually get on around 9, go until 4:35, just depending on the day. But we're there all day long. But of course, these things are scrolling along. People are making comments all day long. So we have a second page, which we call Matt's Important Comments. That's where I'll make 2 or 3 comments during the day about the general market, but it's also where I put my picks. So if you're away from the site for the chat room for 20 minutes or 2 hours, you can come right back in and say, hey, has Matt made a pick? And you can check it out. But on top of that, we have this Tuesday morning Zoom call, just like we're having now. It's been going about a half an hour, but Rodrigo and the gang at Benzinga have been able to set it up so that I can go longer if I need to. And of course, the way the market's been going lately, we certainly needed to. It's been an unbelievably wild market. So in that room, we'll do a couple of different things. Number one, sometimes we'll do some tutorials. Number two, we'll talk about what's going on in the market. Number 3, we'll talk about the trades we've been doing so far and what could look like trades later in the week. That's why I do it on a Tuesday. I don't want to do it Monday because let's get into the week a little bit. And I didn't want to do it late in the week because, things tend to wrap up and you want to, I think Tuesday is a good day. We do it 11 o'clock. I'm sorry, 11:30. Repeat that. 11:30 Eastern time. And it'll go half hour, 45 minutes. And we've even gone a full hour, like one other time, but we'll just, again, it depends on how the days, that particular day is going. We may have a day in early August this summer where it'll go 20 minutes, who knows, because it might be really quiet at that time. Although August, in recent years, August have been very volatile, so you never know. But the point is, it's a nice way, and then people ask questions. And now obviously people are asking questions during the chat, but I've got my Bloomberg up live and we're looking at things right there. Hey, what do you think of this stock? What do you think of that stock? What do you think of this ETF? What do you think of the little market? And I'll just punch up the stock and we'll look at it right there. I'll punch up the ETF. It might be gold. Let's look at gold. Let's look at the China, the Alibaba, some of the Chinese.
So all they have to do is literally look at the trade that you make and mirror the trade. That's it.
Right, that's right. And again, it's up to you. Anybody, you can mirror my trades, mirror other people's trades. Like I said, we have people in the chat room who've made trades that I have commented on and said, because I'm not going to do 20 trades in a day. And then it's like, hey, that looks like a real good one. Then I kick myself in the can for not going. I said, wait a minute. The person asked me what I thought of it, said he was going to do it. He or she were going to do it. I said, yeah, that looks like a real good idea, but I'm not going to do it. And then the person makes 2,000% and I'm sitting here making nothing. But the point is that there's other people. It's a great community, a great team. We work really well together, talking things back and forth. We have a lot of fun with each other, rib each other all the time as well as we've gotten to know each other. And but the point is that you can just mirror what I'm doing. I'm just telling you what I'm going to do. I mean, that's your decision on what you do. I'm not your investment advisor saying, hey, you should buy this, you should buy that. But I will help people if they say, hey, listen, I own this stock, I own this option. It doesn't expire for a couple more weeks, or I've owned this stock, I've lost a lot of money. What should I do? I've owned this stock. It's made a lot of money. Should I take profits? Again, I'm not your investment advisor, but I'm also not. But I would say, what I'll say is like, hey, this is what I would do if I owned it. And I just kind of tell you what I do. That's, because the important thing is like Rodrigo said, you're seeing my trades, every single one of them. It's not, and I tell you, if it's going to be aggressive, it's going to be small. There's a lot of times I'm going to do a very, very tiny trade here. And that's how it started with the calls I bought on Friday in the QQQ. I went in and bought a tiny amount. But then I said, hey, I'm going to add here. And as it moved up, I said, I'm going to add here. And it dipped and came back up. I said, I'm going to add. So people get an idea of what's going on. That's one of the biggest things in trading, is that too many people in the world saying, I bought Microsoft here, and then they never buy it again. Well, it went up and I missed it. I was like, what? Just keep buying it if you like it that much. You don't have to just buy it once. Or especially when you're an active trader, you want to be able to look at things more than once and say, hey, the stock's really come down. It's really getting oversold. I want to buy it here, but it's impossible to get the exact bottom. So let's say I'm going to put 20% of the money. Let's say I just want to put $200 in this one. So I'm going to put $40 at first, and then I'm going to buy, if it comes down a little bit more, I'll buy $40 more, and then it goes up, and then you kind of get an average price. You can play around. You never stay. If a stock falls out of bed, you just get out of it, take your losses, and move on. But if it falls a little bit, okay, you're trying to pick your spots. Don't be afraid to buy things at more than one time. The commission isn't anymore. Yes, you have to pay another commission, but the combined commission is the same. If you buy 100 shares, if you buy 10 contracts, and then buy another 10 contracts later, you've bought 20 contracts. It's the same commission if you bought them all at once or separate. So don't worry about that. But the point is and of course on individual stocks, most of us don't have to pay any commission. And if you're not in a website, or I'm sorry, in a trade platform that if they charge you commissions on your stock trades, you should not. You should go to a different platform, because pretty much everybody does regular stock trades for free. Anyway, so these are some of the things we're doing. But sometimes we even have some bigger trades, and I just want to go over this one before, because I do want to step back in a few minutes and talk about whoops, what happened to my, oh, there it is. Talk about, what I'm looking at in the market right now. Why I think one of the biggest things that we do in the chat room is we really try to be an educational platform for people to learn why I'm doing things. There's so many things in the trading business that are convoluted, they're counterintuitive, but they make sense. It's like, oh, everybody's bullish. I mean, for some people, you're going to go, everybody's bullish, it must be going higher. Actually, when everybody's bullish, it means there's nobody left to be bullish, nobody left to buy, and that usually signs a top. When everybody is bearish, that doesn't mean it's going lower. It actually means that everybody's kind of sold, and that usually forms. So it's when sentiment is in the middle. When sentiment's slightly bullish, that's positive. That is bullish. When it reaches an extreme, that's bearish. And same with the other thing. If the sentiment gets extremely bearish, that tends to mean that the market's getting to the point where it's going to turn around. Now, here's one of the trades we made. We talked about that 2,000% move that one or a couple of people made last week in the chat room. This week, I'm sorry, last month or just over a month ago. I guess now it's about 2 months because it did happen in March. Disregard that last weekend's chart. This was the thing that I put. You can see it happened in March. This was the FXI. It's an ETF in the Chinese stocks. So I don't just look at U.S. stocks. I don't just look at U.S. ETFs. This was, 20 years ago, if you wanted to buy a trade in Chinese stocks, you need to have a broker in Shanghai or Hong Kong or someplace who do the currency swap and all these other different things. No, you have an ETF, you can trade it. And I came in and we saw how incredibly oversold the Chinese stock market was. You can see here, we use the RSI, Relative Strength Index. And it's a good tool. You can see when it gets down to this green line, which is the 30 level, tells you it's getting oversold. And that's green line because it says, hey, that's a good time to buy. It's getting oversold. Then the red line's up at 70, and that's when it gets oversold there. I'm sorry, overbought there. It's a good time to sell it and take your profits, or even want to short it if you want to buy some puts or whatever. But look how oversold it got here. And I knew the fundamental talk about everybody was negative on it. It was like the Chinese government is cracking down on all these different industries, and I've been negative all year long. And I'm still negative, okay? I remain negative on an intermediate to long-term basis. We could, but I'm going to show you later on why I think we could be, next week could be a good week to pick up FXI on the positive side again, and maybe even an Alibaba and stuff like that. I'm not there yet. I'm not ready to pull the trigger. Things have to line up correctly next week. But this is what happened. It got ridiculously oversold. And I also know, just from my experience, the Chinese government was going to go in and support their market. They are a communist country. They need to save face. They can't have their stock market falling out of bed. So they'll prop it up themselves. Sure enough, the next day, so we went in and we bought calls. So all the fundamental stories were telling us this is going to go lower. But my work, using technical analysis, sentiment, and my experience on what the Chinese government was going to do, we stuck with it. And, sorry. And sure enough, the next day, see, so here it was. This is what it was. And it bounced 27% in a day, okay? And actually got up 28% the next day, okay? Look at this. Look, again, it was huge rally. And what did we do? Again, on the 15th, the very end of the day or close to the end of the day, we bought the FXI, March 18th, $30 call options. By 10 o'clock the next morning, they were up 3,000% or 2,900%. Okay, here at the opening, people were saying, should I take profits? I'm up 1,000%. Should I take profits? I'm like, no, because I knew the government, a lot of times when things gap open, they kind of roll back over. I knew that wasn't going to happen because I knew the Chinese government themselves were in there supporting their market. I thought it would go higher. So after about an hour or so, I finally said, okay, we're up 3,000%. I've got to take some. And I came in and said, let's take half of our profits here. Sell half, made 3,000%. Then at the very end of the day, we're up almost 8,000%. You see 7,800%. And I said, let's take the profits on the rest. There was a couple of people who continue to hold on, I guess one person made as much as 14,000% on that trade. That's just, bonkers. It's just a great move.
Well, it still rallied the day after.
Exactly. The next day, it continued to rally, and people made even more. I got to admit, I can't take credit for that. I can only take credit for the 8,000% gain. But there are others who made more, and obviously, it worked out extremely well. So these are the types of things that we're doing. I wanted to show you all those different ones because they are opportunities. Whoops. Going the right way. Yeah, they are opportunities. You know, some of them are unbelievable opportunities, like the FXI. We did the same thing in Viacom. This was a year ago now. And again, you know, this one was one where we made 5,000%, 5,000%. Viacom, again, we were looking at the weekly RSI chart. Look how overbought it got. Okay, every time it got overbought, here, the stock went down. When it got to here, I was like, this is ridiculous. It was right in the middle of the meme stock thing. And I was like, I don't care what's going on. First of all, they're not curing cancer. They're not coming up with the next new thing. They're just a TV/movie company. They're very good at what they do. They're a great company, but the stock does not, you know, deserve to be at $100 at the time. Sure enough, we bought the puts, and you know, whoops. And then you can see what happened to the stock. It dropped 60% the next day, and we made 5,000% in our in the options the next day, in the put options. And there were people who I can't confirm it, but the people in the chat room who said they made as much as 10,000%. So again, I've given you a bunch of, these were the ones I was talking about earlier. We also had, okay, here, these ones I've been talking about, but again, these are ones back in April. The SQQQ, we made 200% there in over a 3-day period. This was back in April, okay? You can see April 26th. The VIX calls, this was, again, this says the May 18th calls, but you can see down here, it's April. We made the trade in April, 82%. We're not getting 600% every time. We're not getting 6,000% every time. But you get 80% in a couple of weeks or in a couple of days. We want to be able to take advantage of those things. Oops. Again, back in April. So here we made 100% in you know, the bottom of 3 o'clock on the afternoon one day, sold them at 11:15 the next day, made over 100%, doubled our money. So VIX calls, I already talked about that one, I'm sorry. SQQ, again, back in early April, another one where we got 600% in just 2 days, okay? Because the market really sold off. April, you know, March, and I know some February, I already did that one. There's February, so some February trades we made 300%. These were the QQQ options, etc. So my point is, these are not something that we make, you know, the big ones where you're making thousands of percent. Those, you know, maybe a couple times a year. But the ones where we're making several 100%, 2, 3, 4 times your money, are fairly consistent. They're not every day, not even every week, but we're doing it pretty much every month. We're getting those big trades, and when you do those, you know, again, everybody should have that big bucket, which really long-term, really you know, big bucket of money, investment money that's long-term oriented, many years down the road. But if you have that one, if you have the inclination and the time and the interest, to have a separate bucket, it might be a little bit smaller, but you can grow it a lot more and really maximize your returns. And again, this goes back, and I said we have the tools. And what are those tools? The tools we have now are we have options that expire every week for all of the big, basically all the big cap names and most of the mid cap names. Some of the smaller cap names, not so much. But you know, if you want to buy an option, an Apple computer, you don't have to go out. You know, 10 years ago, you had to go out several months, and that cost a lot more money. Okay, because you know there's a certain time value in those options contracts, and so if there's a lot of time before the next expiration, you have to pay a lot more money for it. It doesn't matter if you think the thing is going down in 2 months, you should buy a long-term option. Okay, but if you think it's going down over the next week or so, and we have good, you know, our work is very good in picking up those points in time. Well, I don't want to have to, you know, I don't have to go out 2 months to buy my option. I want to go out 1 week or 2 weeks. And that's how you can make these bigger things, because all these big stocks have weekly options. And then I've talked a lot about the QQQ and the SPY, which is the ETF for the S&P 500 index. They have options that expire 3 times a week, Monday, Wednesday, Friday. So again, you don't have to go out a couple of days. If you really think something's getting really oversold or really overbought, and you think it's poised for a big move over a very short period of time, you can buy those options just a few days out. And again, those are much cheaper, which gives you much more potential for upside. And the tools are there. In the old days, when we've had big periods of volatility that last a year or 2 or 3, back in early 2000s, back in 2007 through 2009, 2018, etc. Even in 2018, we're starting to get those, but we didn't have those tools. Those tools weren't available to us. And we also have these inverse ETFs. and leverage the ETF. So if you want to buy, if you're not really comfortable with options yet, and you're like, geez, I think this market's, it's last week, the market really sold off again. I think the market's going to bounce 5% this upcoming week. If that's what you think, well, you can go ahead and buy the QQQ or the SPY. But if you buy the TQQQ, which is the levered ETF, if the market goes up 5%, it's going up 15%. 15% a week. So these tools, and all these things are very, very liquid. And like I said, I don't make any money churning your account. You have your broker, you have your regular broker, or you're using a brokerage platform. They're the ones getting the commissions, and not me. Okay, and so you do have to pay commission for trading options. I don't get those commissions. I get nothing. You see my trades, decide whether to go along with it or not, and then. But the point is, if you trade 100 times a day or once a week, it's not going to make any difference to me. I'm just trying to help people make money in this environment in the marketplace. Now let me just step back a little bit here. I'm kind of you can see I'm all worked up. I really love this. I'm very passionate about it. And you can see we've had a lot of good trades. Now I want to repeat, not every trade works. We had a trade last week. It was funny on Thursday, I bought some TQQQ calls thinking the market was going to rally, and I got out of them very, very quickly, about an hour later. I don't usually do that, but if something's not working, this is poised. This is poised to take off right now. And when it didn't happen, I'm like, even though I hadn't lost any money, I think I sold a trade for a very, very, very small loss. But it didn't matter. It's like, it's not working now, I'm getting out. And I'm going to wait until it looks like it's working. And so I waited till the next day, and that's when we made the big trade in the last half hour on Friday and made a lot of money. But the point is, let's step back a little bit more and just talk about what I'm thinking on an intermediate and long-term basis. I'm still very, very cautious on the market. For those who see me on it was funny. I was asked just over a week ago. I was being interviewed by Bloomberg TV in London, and they asked me, there's a lot of people out there in the marketplace. I'm sorry, a lot of economists and strategists who've changed their recommendations and their outlook a lot, several times this year. What have you done to change your outlook? And I said, absolutely nothing. My outlook's been the same since the fourth quarter of last year. I saw this coming. To me, it was as plain as the nose on your face. But with what the Fed was doing, with all the leverage in the system, I knew the market had to come down. Even if people saying, well, forget about the economy. That's what these people do. They're too caught up in their textbooks. They think the only way the market will go down is if we fall into a recession. And I'm like, no, I kept saying it doesn't matter. Flat out said, doesn't matter if we go into recession or not. The Fed and all that emergency level of liquidity that they provided long past the time that we were still in an economic emergency pushed the stock market way ahead of the underlying fundamentals. So I knew it had to come back down, even if the economy kept on an upward trajectory. So that was the easiest call in the world. And I stuck with that all year long. And I kept saying, in December of last year, I said, you got to raise cash, got to get more defensive. And I've been saying that all year long, and I'm still saying it. But, I'll talk about how we could have a little bit of a bounce here next week. We'll see. But if we do get that bounce after a short period of time, we're going to raise cash again and get defensive and make some negative bets as well. But the point is, too many people on Wall Street think that they were really smart, and that's how they made so much money. They don't realize how much the Fed's steroids injected the system with steroids. That had such a big impact because it's human nature. They just want to believe it was their own thing. They don't want to give anybody else like the Fed credit. So they don't understand that how much it will cause the markets to go down when the Fed is pulling the plug. And they didn't just pull back a taper back on QE. They did that much faster than anybody was thinking. At Labor Day last year, they're now raising rates much faster than anybody. People were saying there's no way they raise rates until the second half of 2022. Obviously, they've already raised twice this year. And then, of course, QT shrinking their balance sheet. They said that won't happen until 2023. I was saying all of these things are going to happen. They're all going to happen faster.
Right.
And therefore, the market has to come down. And that's why we will continue to see this kind of volatility throughout the rest of this year.
The thing, Matt, is that also like in some news places, right? Like they just really, I guess they can't be bearish, right? Overall, and they just bring people that are generally bullish. So I believe that, a highlight of your chat room is that you're transparent and honest with people. If you like a stock or you don't like it, you're upfront with them, right?
Exactly. I mean, And, I mean, these people, I mean, there's a lot of people, the guests that they have, are, whether they work for, if they're, strategist or an analyst on the sell side, working for a brokerage firm, or if they're if they're a money manager working for a big money, big money manager, they tend to be bullish because, especially the strategists, because their job is to keep money in house. They, because the markets do go up over time, markets do go up. And so they just stick by their guns. But some of these people, I don't know what in the world they're, you come out and saying, hey, this news that people are spending more money on their credit cards is good news. It means that the consumer is strong. I'm like, what are you talking about? It's that if people it's not paying cash for it. I mean, they're not paying off their credit card every month. That means they can't afford to. And why can't they do that? Because of inflation. I mean, it was just as plain as the nose on your face, in my opinion. They kept saying the consumer's really strong. I'm like, yes, the consumer's strong, but it cannot stay strong because inflation, it's costing them $100 to fill up their F-130 pickup truck. It costs them twice as much money to buy groceries. They have 64% of Americans live paycheck to paycheck, okay? And they cannot have, they don't have a lot of discretionary spending. So if they're going to spend more on groceries and food, they're going to have less to spend on other things. They're not going to go out to dinner 2 or 3 times a month. They're not going to dinner at all. Now all their dinner is going to be at home. That vacation again, we had some pent up demand, and that's what these guys didn't realize. It seemed so obvious to me, but the consumer's really strong. It's like, that's just another round of pent up demand. They're so sick and tired of the winter and being clogged up. They're going, no matter what it costs, they're taking their spring break. But now suddenly they're looking at it and going, oh, that week on Cape Cod we were thinking about doing? Well, we're not going to do that. And we're certainly not going to do it next year. And so we're going to see as things come, as the consumer pulls in the horns in this incredibly important, the consumer 70% of the U.S. economy, the economy is going to slow. I've been saying since the first quarter, January, February timeframe, that we're headed for a recession. And of course, they can't tell you that. That's not good for job security. They have to say, what do they say? They say, I don't see a recession starting this year. And then when the recession comes, they'll say, well, I saw it coming. I just thought it was next year, and it came. That's what they do because they have to be bullish because that's what they're paid to do. I mean, they work for a brokerage firm. That's what they're supposed to do. Luckily, I would work at a firm who tells us, tell it like it is. We just want people to make money. We're not in here we're not trying to keep assets under management like many of those brokerage firms are doing. So the point is that these things are going to stay for a while. And of course, the next big thing that we just found out this past week is that earnings are going to have to come down, which again, to me was what are these people thinking? I mean, we have really good firms, really top level firms who've been cutting their GDP, gross domestic product, their GDP forecasts, so their economic growth, they've cut them in half since the beginning of the fourth quarter of last year. So in just over 6 months, they've cut their GDP forecast in half, and yet they haven't touched their earnings estimates. It's ridiculous. How can the economy, the economic growth be half as strong as you thought it was going to be, and earnings still be, up through the roof? It doesn't make any sense. And so I've been saying for weeks and weeks, actually for months for that matter, that these earnings estimates are going to have to start coming down. And sure enough, last week we learned from Target and from Walmart that these higher costs through inflation are eating away at their margins. If you get lower margins, you have lower profits, you have lower earnings. And it wasn't just the retailers. We saw John Deere, the big farm equipment and tractor company. They said the same thing. How is this a surprise to anybody? It makes no sense. Okay, everybody knows these costs are much higher. You can only pass on so much to the consumer because you know what? Real earnings. People keep saying, well, the wage earners, are doing. There's plenty of job openings. If you want a job, you can have a job. That's true, and some of them are high-paying jobs. But real earnings, in other words, earnings versus inflation, have gone down 7 of the last 8 months. Okay, so people are losing their versus inflation, and therefore they don't have as much money to spend. That's why they're going on the credit cards. How people couldn't see that as being a problem coming forward, I have no idea. but the fundamental outlook. So in other words, the stock market had to come down anyway, because it had gotten way far ahead of the fundamentals. But now the fundamentals are turning down, which means it's going to have to fall further over time. That said, it doesn't mean it will fall in a straight line. Now, this is what I want to get. I'm going to look at a couple of things. Well, first of all, one last thing, just on a negative thing. People are saying the market's cheap, and the market's not cheap. Look at it, 17 times earnings right now. That is not cheap. I mean, they try to tell you it's cheap because the valuations have been elevated. They keep thinking because it's lower short-term interest rates. Valuations have been elevated. Yes, theoretically, some of it has to do with lower short-term interest rates. Lower long-term interest rates in general do make valuations, higher valuations acceptable, at least somewhat higher, but not as high as we were seeing. Okay, and then when the market comes down, it doesn't stop at fairly valued, especially when the market's highly leveraged, like this one was. We have at the beginning of the year, we had way more margin debt. Okay, at the beginning of the year than we had at the top in 2007 or the top in 1999, 2000. Way more leverage, and when that leverage gets unwound, the people have to sell. They have to sell to meet their margin calls. Okay, and so they don't care when the stock market's going down. They don't care if it's oversold or cheap. They just keep selling because they have to meet their margin calls. That's why we get these big declines. And look what happened. The last time, 2016, the market bottomed at 15 times earnings. In 2018, at 14 times earnings. Same thing back in 2020. We go down to 14 times earnings, okay? And if earnings decline, we're going down to 3,000 on the S&P, okay? And we close at 3,900. Do the math. That's the problem. But however, let's look at what we're looking at right now on the technical side of things. It may be leading to some sort of a bounce. We saw what happened on Friday in the S&P 500. I'm sorry, in the S&P 500. At the very end of the day, it was down well over 1%, closer to 2%, and rallied all the way back and finished unchanged or slightly in positive territory. Is that the beginning of a rally? I don't know yet, but I'm telling you, we're going to be looking at this very, very carefully early next week in the chat room because we finally now are getting to oversold condition. This is the S&P 500, the weekly RSI. Remember, we talked about the RSI chart. Remember, relative strength index. When it gets down to about the 30 level, it means it's getting oversold. Right now, the S&P is just as oversold as it was at the lows of 2011. For those who don't know, that was when they had the European crisis. Remember, Greece was having all those problems. They were about to go bankrupt. Back here in 2015, 2016, there was a big crash in oil prices. But again, the stock, the S&P got about oversold here. We were actually more oversold than that, right? Same thing, 2018, that was when the Fed was tightening the last time. It's more oversold than it was there. So it's just as oversold as it was in just before it bounced in 2008, 11. More oversold in 2015, more oversold in 2018. Not as oversold as 2020, but that was a situation where the market, the global economy had basically shut down. I don't think we'll get that oversold. However, there are no guarantees in life. As I joke, the only way you have a guarantee of making money, making a bullish trade is if, or making trades, is if you're if you're married to the Speaker of the House of Representatives. I guess I'm not trying to make a Democrat-Republican thing. That the politicians on both sides of the political aisle, it's disgrace what they do in their personal accounts through legal insider trading. But anyway, I digress. Here we are. We're finally gotten oversold. Even though this market's been getting killed, it hadn't been oversold. We've reached that level. Doesn't mean it can't get more oversold, because we see it did get more oversold in 2020. It certainly got more oversold in 2008. I don't have that on the chart here. So, but it's a sign. It's like, okay, we're getting oversold. Same thing with the NASDAQ. This is the NDX, NASDAQ 100. The NASDAQ composite is, several thousand shares, several thousand stocks. The NASDAQ 100 is the 100 biggest stocks, which in the NASDAQ, and the vast majority of those are tech stocks. So it really gives you an idea what's going on in tech. Now look at this. Remember in 2020, it's just as oversold as it was in 2020, okay? Just as oversold as it was in 2018. More oversold in 2016, more oversold in 2012, more oversold in 2011. Okay. Now, it did get more oversold in 2008. And I think it will get that oversold later this year. But we're seeing these things that are telling us maybe this market can see a bounce. So we're going to be looking on the buy side for the first time and for multi-day bounces. And we've made a few trades on the buy side that have worked very well, but they've been for a day, 2 days. This one could be multi-day bounces. This is what we're looking at right now. These are the things that are leading me to believe that. Okay, here's another one. What's called the Bollinger Bands chart. Again, these are the weekly ones. Okay, now what are the Bollinger Bands? The Bollinger Band, this is the 20-week moving average, this gray line. When it gets above the purple line, that means it's 2 standard deviations above that 20-week moving average. When it gets below the greenish yellow line, that means it's 2 standard deviations below that 20-week moving average. And that tends to be a good time to buy. When it gets up to the top, it's a good time to sell. Well, look what happened in late 2018, early 2019. Got below that line, it was a great time to buy. Look what happened here. Same thing happened, right, in 2020. And great time to buy. And we're doing the same thing right here. Are we a week early? We could be. That's why I'm not saying, hey, everybody, jump in with both feet Monday morning as soon as the market opens. Not saying that. But we will be talking about that in the chat room for those reasons. And the X is the same thing. Bollinger Bands, same thing. You see how we see it. More oversold. Now here, it stayed below that line for 2 weeks before it bounced. This one was 3 weeks. We've only been below it 2 weeks here. It doesn't mean it can't go 4 weeks. We can't. There's no certainties in this. But again, this is, and it's not just the indexes. Okay, they're telling me this. Look at the high yield market. High yield market, it was only been more oversold than it is now back at those 220 lows. 220, yeah, the year 220, during the pandemic lows. Again, the high yield market may go down further. It may go down and retest the kind of oversold condition, but it's very, very oversold. And you see what happens when it becomes oversold. It sees big bounces. And the high yield market is a very good indicator.
Really quick here, Matt, just want to give a shout out here to MRBY. Welcome to the Stock Picks Inner Circle chat room. Let's go.
Glad, welcome aboard. I think we're gonna have some really great trades for you early next week. And again, I'll do a couple more charts here very quickly. You know that everybody's about the retailers last week, they got clobbered. Same thing. The XRT, which is the retail stock ETF, it did get more oversold in 2020, but again, the economy completely shut down then. And I only go back to 2018, but it is the most oversold it's been, except for that. Going back a full decade. And the XLY, which is a broader, it's not just the retail, it's a consumer discretionary. It has a lot of retail stocks in it, but it also has Visa, MasterCard, it has travel stocks, et cetera. Just discretionary, where consumer discretionary, but it's very similar. And also note, you can see here, it's getting down to its 200-week moving average. It oversold 200-week moving average. Could that mean it's going to bounce? Same thing with the retail. Now we can see that it didn't hold last time, so we're not saying, believe me, if this had bounced off the 200-week moving average the last 3 times, I would be saying we got to buy this group. So I'm not there yet. Number one, it has gotten more oversold before. Number two, the 200-week moving average isn't always. You can see how it tried to provide some some support and resistance back. Back here in the end of last decade, but that's not the most important thing. But the point is, we see how we're getting so many different groups that are getting oversold. Now, I just want to move on to, whoops, let's see if I can, there we go. Pull up my Bloomberg here, hold on. What happened to my Bloomberg? My Bloomberg screen I'm trying to work with. Oops. Hold on a second. Hello? Okay, good. Sorry about that. Okay, I don't know what happened to my Bloomberg page, so I may have to restart it. Hold on. Because I want to do some live stuff and show you trades. Gosh darn it. What happened to it? That's not it. Okay, I'm going to close this down. But while I'm closing, it will only take me a second to to bring it back up. Hold on a second. Let's go with that. Shoot. Okay. Sorry about that. Okay, let's just talk about what's going on here with the market here. Gosh darn it. Okay. Okay, I'm going to bring this back up. It's going to take me 2 seconds here. I apologize, but it shouldn't be. Okay, file, new tab. Where? Chrome. Okay, sorry guys. But okay, so you see what I'm talking about here. I just need to get this thing up because it's so important what's going on right now in the marketplace. But what did I say? Was the transportation index is another one where people have been saying, oh, the world is coming to an end. Okay, that's great. But the transportation stocks are also getting knocked down, are getting oversold. And when I look at, everybody's talking about the transportation stocks, but they're not going deep into that group. What I'm looking at is the trucker stocks and the rail stocks. All these transportation stocks are breaking down, except for the railroad stocks. Okay, the railroad stocks are hanging in there very, very nicely. And and I don't want to say they're hanging in there. They've come down, but they have not broken below their key support levels. So okay, I don't know what's wrong with it. Oh gosh, I'm really sorry, people, but I'm trying to log into my Bloomberg and it just won't work. Okay, I'm going to stay on that. Well, I don't know what to tell you all. I'm just trying to do. Okay, let's go. New tab. Oh boy. Well, okay, great. Okay, well, I'm gonna have to work back. This is not being able to use my Bloomberg is a killer here, and here we go. Okay, maybe I can finally OCE and let's see if it goes in. Nope. Well, let me do it. Okay. Okay. Wow. Oh boy. Okay, okay. See, but here we go. We're gonna do one more time.
For those that are asking, yes, the chat room has a 7-day money back guarantee, guys. This is the Memorial Day special till midnight. So, but if you have questions, put them in the chat in the meantime while Matt gets this thing set up.
Yeah. Okay.
I think, I don't know if you mentioned it, Matt, but you also do provide education on the Tuesday sessions for those that are trying to learn how to trade with your strategy, right? Like just with the calls
Absolutely.
and puts.
Absolutely, and we're trying to talk. We're actually going to do a couple of new quick webinars for some not webinars, but just quick films. We can just talk about some of the real basics that I like to look at, whether it be technical analysis, the actual options trading, some of the things we do in both the okay, I think this is my chat. What's this? Oh my goodness gracious, I don't know what to tell you here. Rodrigo, you still there?
Yeah, what's up, dude?
Well, I know it's going to take me. I don't know what else. Okay.
Yeah, I mean, just let me know. But I have a couple. I mean, if you want, there's a couple of questions that the folks have been emailing me. Maybe this is a good time while you get that set up. So I'll be answering them. These are questions from you guys that you have emailed me from the contact. So all you like 1,000 something people here that are looking have sent these questions out, right? So are the sessions on Tuesdays recorded? Yes, they are recorded and available for Inner Circle members. Does everybody that joined get a free laptop? Yes, till midnight. Is this for new traders only or just for advanced traders? It's for all sorts of traders. Matt does, it's the simplest type of trade and options you can make, buying a call, buying a put. And Matt gives you the exact strike price, expiration, entry, exit, timestamp, no hypotheticals, entries and exits, right? The chat room schedule is Monday to Friday, 9 to 5 p.m. Of course, it is open 24/7. Does Matt Maley provide special trades? Yes, Matt Maley provides special trades for earnings, Fed meetings, special market events, all that sort of stuff. There is a 7-day money back guarantee. I know a couple of you guys were asking, and price at renewal is going to be the same as it is now, right? You're going to keep that 70% off. So, and it is mobile user friendly. We do have sound alerts, and we're going to start pushing out some push notifications on desktop very soon. So that kind of covers most questions. But feel free to email the contact in the chat we're putting. And how are you doing there, Matt, with this
It looks
thing?
like we're finally getting back up here, hopefully. But just trying to bring it back up. I don't know what the problem is.
Yeah, there is a lot to cover. And I do know that, I mean, you cover Bitcoin as well, which is interesting. I mean, you cover a lot. You're a global market strategist, so you're always on top of all these things.
Well, I don't know what to tell you. My Bloomberg terminal is just not coming up. It's a problem with Bloomberg, and I don't know what else to tell you.
Yeah. What do we? Well, you can. I'm not sure where did you want to go with it then? Because it's. I mean, we can wait for you. It's fine.
I can log off and come back on. It might be the best way to do it.
Yeah. In the meantime, I mean, we can do. I can show them the chat room and stuff
Okay,
like
why
that.
don't you do that, and I'll come back on in a second.
All right, hold on one second. Hold up. 1 second. Let me get this going here. Have to get this going. All right, I think we're good here. Do you have the invitation to get back in and everything?
You might want to resend it to me just in case.
Okay. All right. Let me call someone here. We're not gonna let you down, guys. All right. We got a special session, and it's not over. We're not gonna let Matt leave just like that.
All right, I'll be back. I'll be back.
All right. All right, guys. So technical difficulties here on the Bloomberg platform side with Matt there, but don't worry, he's going to get it all set up, and we are going to make sure that he gets back here. In the meantime, I'm going to show you. I know that you guys have a ton of questions on the chat room, so I thought that it'd be a good idea maybe to show you all this stuff here. So PE, keep up the questions. What is the schedule? Monday to Friday, 9 to 5. Good question there. The next question, just talk. Yeah, I mean, we're gonna wait for Matt there to get the stuff set up. Yes, he got disconnected because of something. Bloomberg platform. Get back in. All right. So I'm just making sure that everything is set up so that we can get Matt back in when he gets that thing fixed up. And in the meantime, really quick, I'm going to show you this chat room. So this is where we are the entire day, Monday to Friday, 9 to 5. Some people are there the entire day. It's an international community. So there's people throughout the entire world out there. It's not just US, Canada, Europe, Africa, everywhere, Australia, Sydney, Philippines, all sorts of places. Two places where you can find the chats, right? Inner Circle chat is where everybody's posting. And I mean, everybody, all the members. And then separately, you have the other chat, which is the Matt's important messages. And in that chat, you can basically, that's where only Matt can post, right? So since only Matt can post, it's a lot easier to find those trades. You don't have to kind of scroll, to find trade setups, anything like that. Pretty straightforward, right? You follow Matt. He's posting entries, exits. All you have to do is literally mirror the trade, right? If you have questions, put them now, because then once Matt comes back in, we're just gonna get back to it, okay? Let's see. All right, a couple questions here on the Zoom chat. 9 to 5 p.m. Eastern. What's up? What's up, Mohammed? How we doing, dude? Nice to see you there. Jess, that's a question for your broker. All right, so this is where, as you can see the format really quick, just want to show you this before everything gets, we get Matt in here. You can see the exact, right? I'm going to sell half of the SQQQ May 20, $55 calls. This is the day that I was in that trade. So it's pretty easy to follow, as you can see. The other thing I want to mention really quick here is that we do have sound alerts for this. So if you see right here, this bell, you click it, you unclick it, these bells turn yellow or just like grayish. So when it's yellow, that means the alerts are on, right? So just keep that in mind. And what's the other thing I wanted to show you guys? So everything is going to be posted here, the session, all that stuff, how to join the Tuesday session. That's going to be there on sent by email there as well, right? Does Matt do live calls and sessions with, no, Matt does not do any Sunday sessions. Matt does Tuesday sessions. PE. And right, so this would be, so even though Matt does a lot of option trades, right? A lot of options, buying calls, buying puts, that doesn't mean that you can't ask him about something else, right? That could be either, swinging an option, swinging a trade, a stock. It could be a long-term hold. Like he said, he's not your financial advisor, but hey, he's 40 years doing this. I think he's been doing it for a long enough time that I would be, I'm comfortable with it. I'll tell you that. I'm a trader and I've been trading his stuff for over 1.5 years. And it's been pretty good to me. So there is a 7-day money back guarantee. If you really, for whatever reason, you don't like it or anything like that, you get all your money back. So no harm, no foul, move on. And, it's a little bit more active trading, you could say, but you can also make it something else if you do want it, because you do have that immediate access. Jared, yeah, so it is a premium service. So it is, it is a paid service to be in Matt's chat room. You get access to Tuesday meetings, live trading, Monday to Friday with him, entries, exits, and his insight on really what's happening. And if you've been watching the news, all those guys have been getting it wrong for like the past year, except for Matt and that other guy he said from Morgan Stanley. So develop bits, would this only be advanced? Good questions, by the way. These are pretty interesting questions. Would this only be for advanced or also for beginners? So it's, we have both people that are advanced and people that are beginners, people that want to learn how to trade basic options for the volatility, right? Like, so the people that get into options for making, big gains, they're going in there for buying calls and puts, not for doing spreads. And that's really what Matt is doing, right? The biggest gains in options are done when you buy calls and you buy puts. They're not done with spreads. Everybody knows that. So that's really, now, not everybody can time the market as well as Matt. That's the thing. Everybody wants to do it, but nobody, it's not a lot of people that can do that. But do this for 40 years and it's going to be a different, you'll see what I'm talking about. But that's what Matt specializes in, right? Entries, exits, calls, puts. PE, do we get, we do not know. There's no text alerts for Matt's trades. You'd have to be in the chat room. You do get sound alerts. We do encourage you to be a little bit more active. Keep in mind, these are really volatile options that we're buying. They'll go up really quick. You want to make sure you make max profit and minimum gain.
Rodrigo?
Yeah.
Can you hear me there?
Yes.
I just want to make sure you knew I was back on. And
yeah, no worries. Yeah, we just
finish what you're saying, and then we can hopefully go over to the Bloomberg and we'll get back into what we were saying. I apologize to everybody.
No worries, dude. Just, the questions came in. People definitely wanted to, so we're getting this out of the way there. PE is running with the questions hot. Let's see Matt show his charts. So when Matt does his sessions on Tuesdays, I believe he shows his charts. Yes.
Yes.
So develop it. To answer your question, it's for new traders, advanced traders. Matt has a Tuesday session where he goes all in with market updates and basic education of what's a call, what's a put. If the members need something, Matt has full flexibility to run those sessions as long as he wants. If he wants to add another one, all he has to do is call me and hit me up. I'll do it. Matt is all about it. So, and we're all in to help you guys. So I think that kind of covers most of the questions there, Matt.
Yeah.
And oh wait, hold up, Mohammed.
Again, I apologize to everybody. I don't know what the problem was. It was probably my fault. It's certainly I'm not the most technologically advanced guy in the world, but but it was, I don't know if it was Bloomberg's problem or my problem. But I'm just going to share the screen. Okay.
Yeah.
Okay. Bang. Share. Okay. Now, can you see my Bloomberg screen there, Rodrigo?
Yeah, I think it's good now.
Good. Again, I apologize. Don't know why I couldn't bring it back up, but oops, there we go. That'll make it a little bit bigger. There we go. Okay, let's get rid of that. And okay, now I'm so sorry. Let's just go back to what I was talking about. Remember, I was talking about how all these different, the S&P, the NASDAQ are getting very oversold on an intermediate term basis, not just a short term basis. We also see the transports getting oversold. But I'm going to look at this. This is what I'm looking at right now. One of the things I'm going to be looking at very, very closely next week is the railroad index. It's the S&P 500 railroad index. Now, there's not, obviously, not a gazillion stocks in this index, but it's still, we all know, I'm sure you've all heard in the last week or so, how these transportation stocks got absolutely smoked last week, especially the truckers. Okay, and they made new lower lows, well below their lows from 2021. Okay, but look at the railroad index. Now I'm going to get rid of some of these lines here, so it's not quite so busy. The chart's not quite so busy. So take here, get rid of the volume, so you don't have to look at that. I'm going to get rid of 2 of the moving averages, and we'll keep the. So now you can see how it's getting oversold. See that? This is the railroad index, but it has not broken below its 2021 lows. This is a positive divergence. However, the group obviously has not been acting particularly well, right? So I'm going to zoom it in so you can see it a little better. Has not been acting well. Obviously, it's gotten hit right here, but it hasn't broken that low. If it can bounce back from this oversold condition, this is going to give the transportation index a lot of relief. Let's pull up that transportation index so you can look at that real quickly. You can see the difference. I'm just going to give you instead of all the malarkey, I'm just going to give you the this one doesn't have any. This is just the closing prices, but 2009. Okay. And you can see how it has closed well below its closed. It closed. See how it closed well below those 2021 lows. That's not good. That's not good. But we got a positive divergence with those railroad stocks. So even though there's only 4 or 5 stocks in that thing, they're going to be important next week. If they can bounce back and get this transportation index to regain that key support level of 14,000, that's going to be bullish on a short-term basis. And you're like going, Matt, what the heck are you talking about? You just spent 20 minutes telling us how bad the economy is, how the economy is turning back down, how the stock market's way above its fundamentals. What are you talking about? Well, what I'm talking about is bear market rallies. We already saw one in March, right? The market bounced 10% in 2 weeks. You know how many people made money on the upside in the options market during that time? That's what we want to be able to take advantage of. Not just take advantage of to the downside, but take advantage of things to the upside when they come out. Just like I did on Friday when Dave, when the thing made 10 times his money. I was a schmuck. I only made 3 times my money. So but look at this here. And I'm going to go back to just the prices. I compare what's going on now to what happened in the .com bubble. Even though I don't think that this bubble was big, anywhere near as big, but it was similar, and I'll explain why in a minute. But let's go here. I didn't want to go that far. Let's go 2003. Okay, now let me get rid of this volume. You don't care about the, well, sometimes we care about the volume, but for this example of this. So here you can see a nice big chart. This is a horrible, horrible, horrible bear market. But look at these big bounces along the way. Let's get rid of this thing. Put that up there. Out of the way. Okay, look at these bounces. Okay, you think these are tiny bounces? I mean, that is a 20% bounce. There's a bounce here. It doesn't look like much of a bounce. It looks like probably 2 or 3%. That's an 8% bounce. You know how much money you can make in the call options in an 8% bounce? And especially because if the market bounced 8%, you think Apple bounced 8%, Apple probably bounced 12%. Okay, 19% bounce right in the middle of the bear market. Here, this one, boom, again on a percentage basis. Well, I overshot. It was really about 7%. All these different bounces along the way. And the same thing, exactly the same thing happened during the financial crisis. Now, one of the reasons why I think things are different, that it's more like 2000 than 2008, is because back in 2008, the financial system was in real big trouble. One of the reasons why the recession in 2000 that came in the early 2000s, it was barely a recession. I mean, some people some economists don't even call it a recession. And the reason why is the stock market. It was the stock market that got way ahead of the underlying fundamentals. So it had to come back down, and when it did, the economy went down a little bit, and they finally met and were able to go back up later on. During the financial crisis, you had to worry about whether your money was safe. The banking system was on the brink. That was a whole different shooting match. And so the economy went into a deep recession at that point. Why is it so different this time? Well, maybe it's not, because you still worry about it. We still worry about that some hedge fund or something is going to blow up, and they probably will. But I don't think it's going to spill over into a serious banking crisis. Again, if I start to see evidence that it is, I will certainly change my tune. But what happened, again, as I told you before, and I think it's been well established, that the amount of liquidity that was put into the system during the pandemic took the stock market way above its underlying fundamentals. Okay, and even when the fundamentals bumped back up, the Fed just kept piling in that massive emergency liquidity, even though the emergency in the economy, so it could never play catch up. The same thing happened in the late 1990s. And a lot of people don't realize this, but the Fed and other central banks poured, and they didn't use QE, they used other methods, poured massive amounts of liquidity into the system because of this thing called Y2K. For those who don't know what that is, it basically, all the computers in the world were set up to when it went 1998, 1999, but they were all just 98, 99. When it went to 00, 2000, the computers were going to tell them it was 1900. Not 2000. They were going to give the year 1900. Guess what? All those people, those banks accounts, who basically 99.9% of the people weren't alive in 1900, didn't have a bank account, their bank accounts were going to go to zero. And it was a major, major problem. Luckily, they realized it several years in advance, and the globe, spent millions and billions of dollars to fix the problem. Also, the Fed and other central banks spread money into the system to make sure that people didn't panic and pull their money out. They didn't want people to say, "Oh my gosh, if my money is going to go to zero being in the bank because the computers are all screwed up, I'm going to take my money out and put it in the mattress." And if everybody, we had bank runs for no particular reason, just because of a stupid mistake that people made in 30 years ago in the computer area. So all this money went in and pushed the stock market above. Everybody thinks it was a great wave of innovation. No, it was a great wave of liquidity. That's what really pushed it. I know that there's nobody at Harvard Business School is going to tell you that, but that's what happened. Believe me, I was there, and I was a veteran, almost 20-year veteran in the business at that time. I saw what was going on, and I saw what happened. And this is what happened this time. This time was because of a pandemic. We had this global pandemic, so they flushed the system. The stock market moved way up ahead of things. Now it's coming back down. It's going to take time, just like it took 3 years last time. I don't know that it'll take 3 years this time, but it's not going to just take 4 or 5 months. It's going to take a long time. We're going to profit from it.
Right.
Okay.
Really quick here, Matt, because I remember that you and I were talking about when Nadella from Microsoft sold a lot of his shares. When everybody was bullish on everywhere, you were the only one that was really talking about this possible deeper correction that we could have in the markets. But let me ask you really quick before we do get into this other topic, right? So you talked about the consumer earlier, right? We talked about Target and Walmart. So with the rates that are coming up, mortgage payments, car payments, everything's going to go higher. Credit card spending, credit card usage is just going higher a lot. By a lot. Savings aren't really doing that well. I mean, is it possible? Look, I'm not negative Nancy, but I try to be realistic. Is it possible that this could become at some point some sort of like people can't pay their debt, mail back their keys, and we have some issues with the banks?
It could be. There's certainly that possibility. I'm less worried about that right now. I'm more worried about the investment, just like it was in 2000, and 2001, and 2002, and into 2003. That investors are way too leveraged. They have more margin debt than they know what to do with, the big problem will show up. It won't be so much the houses as that people are going to start worrying about. I've got big loans out to big hedge funds, and it's different kind of loans. They're called margin loans, okay? And what happens, and what happened back then, is that the people come in and they excuse me here. I just want to take something off here. The people, those leveraged investors, they have to be unwound, and you get these guys on TV. Some of these pundits that say the bond market's going down, so everybody's going to take their money out of the bond market and put it into the stock market. These people, what planet are these people living on? They don't realize that there's massive levels of leverage in the bond market. And these people, the high yield market is down in a big way. So it may not be houses that people turn their keys to. It's going to be their hedge funds. They're going to turn to the bank and say, we can't raise enough money. We're illiquid. Here you go. Have our portfolio, because that's all we got. And you can't sell it for. And we owe $50 million or $100 million, and the portfolio is worth $5 million. Go ahead and have it. That's where the losses are going to come from. And the thing is, it's like, so people are going to say, well, all those bond sellers are not going to take, when they sell their bonds, all right, they're going to take that money and they're not going to put it in the stock market. They're going to take it and use it to pay off their margin calls. There's not going to be any money left. Okay. They're going to take it, pay off their margin calls, and go into T-bills. Okay. And that's not going into the stock market. It's just a total misunderstanding of how the world really works. The guy obviously never spent 10 seconds on a trading desk and spent all his time learning about the markets in a textbook. I'm telling you, this is how it works. Now we're going to see a lot more of this. The other thing is saying, well, as soon as we see a blow up, that'll be a sign of the bottom. Well, Bear Stearns blew up in the spring of 2008. Okay, Lehman didn't close until 8 months later in the fall of 2008, and the market didn't come for another five months after that. Okay, but more importantly, we've heard about some hedge funds closing their doors. There's a big difference between a hedge fund closing their doors and a hedge fund being liquidated. If a hedge fund closes their doors, that is not a problem. They can just sit there and say, we're closing our doors, we're going to send the money back to our investors, and they can take 3 months.
Is that like Melvin Capital? Right.
Exactly. That's negative news, but it's not a disaster. So people say that's a sign of a bottom. It's like, no, because they're going to give the people maybe 2 months before they get their money back. That's okay, 2 months. I mean, that's what the investors knew, but they're not going to be forced to liquidate the thing between now and Wednesday. I mean, they can do it in an orderly manner, raise their money, and then send the cash to their investors. What happened with long-term capital management in the late 1990s is that they were forced to liquidate because they had huge margin calls. So they didn't have 3 months to sell off their things. They had 2 days or 1 day. They didn't have, and there were no bids. There was nobody to buy their stuff because it was esoteric bonds that nobody ever heard of. So they turned to the stock market and they sold. They had huge a huge position in General Electric, and they sold that like you wouldn't believe. Back then, General Electric was the biggest, most liquid stock and they happen to own a lot of it, and they were able to raise a lot of money doing that. But this is exactly what happened 2 weeks ago. Okay, do you remember we heard about? I'm sure you guys heard about when the stable coins, they were traded 1-on-1 for the dollar, to peg to the dollar, 1 for 1, and then it broke that peg, and it was trading like 40 cents or 20 cents on 25 cents on the dollar or whatever. The Terra stable coin. Well, all these. I mean, yeah, sure, Bitcoin's pretty liquid. It's not as liquid as it was a year ago when it was trading at 60,000. Okay, but it's certainly liquid, but it's a lot less liquid. But a lot of these other cryptocurrencies are not liquid at all. People started getting margin calls. They couldn't sell. There wasn't enough liquidity in those cryptocurrencies and those stable coins and stuff for them to meet their margin call. So what did they do? They sold Apple Computer. That's, again, my experience taught me that because I'd seen it before. And that's why I came in a week ago Thursday and said, we got to buy the heck out of Apple calls, because the only reason why this stock is down 2%, there's no new news out on Apple Computer. There's no negative news. Apple Computer does not, could it fall 10% if they say, oh my gosh, iPhone sales are going to drop to 0, or they're going to be cut in half, whatever? Yes, there is no negative news. The only reason why, and again, I just made the assessment, it was not that hard to assess, is that what would people who own stable coins or Bitcoin or Ethereum, what kind of stocks would they own? What would they use for liquidity to beat their margin calls? What would they own? Well, they sure as heck, I doubt seriously they own General Motors or General Electric anymore, General Electric, U.S. Steel. They own Apple and they own Microsoft. That's why people said, they looked at their portfolio and said, my thing needs $10,000 or $100,000 or $2,000, whatever it happened to be. The only thing I have that can sell, or the one that's liquid enough that I know I can sell to raise that money, is Apple. And it happened across the system. That's why the stock dropped 10% in 2 days. That's why I knew that once that selling, that forced selling was over, I knew the stock would bounce. I saw when Bitcoin started to stabilize, I knew the forced selling was over. We bought Apple and off it went. But we're going to see I kind of went off on a tangent there. Sorry, I ran.
No, you're good. You're good.
How all these things interact, and that's how I'm able to help people see, have one thing happen over here, and for me to say, well, that's interesting here, but we can take advantage of it over there, and we're able to do that in Apple Computer. And that's what we're constantly doing on a daily basis.
No, I know, man. You're lit up, man. Today, Dutch Donna, welcome to the family, Dutch Donna. Let's go.
Now let's just, speaking of Apple, I just want to go back to that and individual stocks. Okay. Now this is not wildly oversold, but you can see it got down. This is this daily, but see how it got down to that green line? Nice rally. Green line, nice little rally there. Green line, big rally there in March. Okay. It's not quite there yet. So we'll have to, again, that's another reason why I'm jumping with both hands. But boy, the thing is too, is if you're like, really want to speculate, you want to go on a really dicey thing, you might want to buy calls in Peloton or something like that, or Netflix. But it's like, if I can make 400% in Apple, maybe my downside is a lot less with Apple Computer, because they ain't going out of business. And Peloton, well, I don't know if Peloton's going to go out of business, but they have a lot more problems than Apple does, that's for sure. So these are the types of things we look at. But Netflix is something. Again, they're not going out of business either. I mean, they're having a lot of tough times, but they're still not, they're sure as heck not going out of business. Look how oversold. This is coming off an incredibly oversold condition. It's trying to get back up to that 200 level. Well, then look at this. Here's another thing that we look at. Equity. I'm so glad I got this back up. I'm so sorry for the but see, look at this. Look what happened in Netflix when it got, see, this is what's called a MACD cross, okay? And what that is when the 9-day exponential moving average crosses above its 12-day. It's kind of like a short-term version of the golden cross when the 50-day breaks above the 100-day. So if you get a positive cross, look what's happened the last couple of times. You got a positive cross there. Look at that rally. And you say to yourself, well, okay, it saw a little bit of a rally, not that big of a rally. Well, actually, then I'm going to give you the percent move. Actually, it was a 20% rally. That doesn't look like much. That's 20. If a stock goes up 20%, its options are going up several 100%. See what happened here? Same thing. Got a positive cross, and it rallied nicely. And here, another positive cross. Here we got a lot of head fakes. They weren't meaningful crosses, right? This was a meaningful one. Stock saw a nice rally. That's probably another 30% right there. We've had a meaningful cross. And what I'm looking for now is a higher high. And again, I'm not pulling the trigger yet, but if we can break above see how it got up to 200 and we get above 200. See, it got to 200, got a little above it, a little above it, a little below it, a little above it. Couldn't, but once it breaks meaningfully, this stock's going to run a little bit. And so that's one we're going to look at too. So again, we're not quite there yet. And believe me, we walk in on Monday morning, tomorrow morning, and the market's looking real dicey. And right now we have bearish. Right now I shouldn't say that. We're kind of neutral on our positions after making all those profits at the end of the week last week. We're going to put some new ones on. I'm just leaning. I've suddenly, literally, after spending a lot of time yesterday looking at a lot of different charts, I'm starting to think, oh my gosh, we might get that rally or a strong rally that everybody was looking for 2 weeks ago. Now a lot fewer people are looking for it. So actually, maybe now it can happen. But we want to make it on both sides. We don't want to be stubborn and sit there and say, I'm a bear. I'm going to. They're called short squeezes for a reason, because people get squeezed. You know what gets squeezed, and it's very painful. So
Yeah, really quick here, Matt. Just I want to give a shout out here to Roy Gehring, newest member here. Let's go, Roy.
Thanks for joining up, Roy, and welcome. And we'll look forward to seeing you on the chat room in the morning.
Really quick here, Matt. But before we do go into, what was that?
No, I was just to say one thing that I when I was trying to get back, log back in here, I thought I heard you say this, and I wanted to make sure just to reiterate it, is that when we're trying to do when we're doing these trades, if you have any questions at any time, just ask. And I worry that people sometimes they feel like, oh, I'm not going to sound that. I'm going to sound. There are some sophisticated traders on the site. I tell you, all of them are really helpful, And if they will answer. And I'll give an answer, and they'll say, hey, well, here's my view. Or if I'm up, because I have to do other things too during the day. And I always joke when I go out to get a sandwich, the market always seems to fall out of bed. We always joke about it. I said, Matt, they always ask me, Matt, what time are you leaving so I can buy puts? People are very, very helpful. If you have those things, I was really going back to what you said, Rodrigo. There are a lot of sophisticated ways to play the options market. Well, the way my expertise has been key inflection points, whether it be long-term, intermediate term, and short-term. My long-term inflection point in oil call 2 years ago was off the charts good. It worked really well. But short-term calls like I made on Friday worked really well also. Right. I'm in the game of buying puts and calls. Once in a while, we'll do some straddles, but I'm not doing buy rights and spreads. I'm not saying there's anything wrong with that. And a lot of people in our chat room do those. That's not what we talk about here. We keep the puts and calls, keep it easy. I give the specific. Here's the Apple computer, the May 29th, $170 calls. Boom. And you get exactly, none of this, well, we're going to do a condor spread with the three, we'll buy 3 calls and 2 puts. And it's like, that's, right. Again, just sophisticated guys who do that all the time. That's great. I just think and it's not really where my expertise is. Right? My expertise is finding turning points on several different levels. And it's worked real well. And I'm glad that some people are joining up here. I think others who do it will find it very, very profitable. I mean, I showed all those examples early on. This is not something where we make, and we love doing those ones where we make 20%, 50%, and here and there. Those are singles and doubles. We want that all the time. The triples, the home runs, and the grand slams, though, happen a lot more often than people realize. And I just have a knack of finding those more often than I think most people. And it's not something that happens once a month. It happens on a weekly basis,
right.
Times, several times a week.
And Jess is saying, I'm seriously considering joining, especially because I've made the most trading options over a year. I mean, Jess, look, 7-day money back guarantee. It's really risk-free for you guys. We're still going to be working there. We're still going to be doing our thing. You guys should at least take it out for a spin there. Matt, quick, I want to ask you a question here. We've been covering China for some things, right, with real estate and stuff like that, right? But and the supply chain, right? All that stuff that's happening there. But more recently, do you have any concern about, I think Biden just went over there to talk, or kind of create an allegiance or some sort. And some semiconductor traders, investors are maybe thinking that there's could be a good short. Maybe, I don't know. What are your thoughts? Maybe the TSM, NVDA, I guess they're all go down, but what do you think about that?
Yeah, on an intermediate term basis, I'm very, very concerned about it. I'm even worried about it on a short-term basis. On a very short-term basis, and I'm talking about next week, I am going to be a little careful. So I guess what I'm saying is that, we always do risk-reward. And we don't want to just guess. That's the biggest thing. So many these meme stock things, those are just guessing. Oh, maybe a short squeeze here and there. We're trying to make educated decisions, not just wild guesses. And one of the things here is look at NVIDIA. Whoops. Push up NVIDIA. Okay. Now you can see how much it's come down. And let's just look. That's this daily RSI chart. Let's look at the weekly. See how oversold it's getting? So what I'm looking for in this, and they report this week. They report on Wednesday. Report earnings. This is going to be an interesting one. And if they report negative earnings, boy, it's Katie bar the door. it's going to be really tough for this group. However, even if it's just in line after a big decline, in line, if this thing bounces off, it's not wildly oversold, but it's getting oversold. Look at this. This is what I'm looking at. See this line? Each of the last 2 weeks, it got right up to its 100-week moving average. That number is 182.74. If for some reason, and we get we talk things about the perfect storm. Well, sometimes you get the perfect storm in a positive way, and we could have a situation where the market is bouncing back, right? Especially if it's later in the week towards Memorial Day, when Memorial Day weekend is usually positive. You get positive earnings. Again, that's a big if. I'm not saying, I don't know. I don't have any inside information. I have no idea if they're going to report good earnings or bad earnings. But if they report good earnings, and again, they don't have to be, I don't think they'll be that good, but they don't have to be that good. They only have to be okay because the stocks that have reported lousy ones have been getting killed, and the stocks reported good ones have seen some nice rallies. So you have, again, if the overall market comes together, positive news, and a technical thing, a break of a third try at the 100-week moving average and breaks above it, the shorts are going to get squeezed like you wouldn't believe. And this stock is going to rally very strongly into the end of the week. That's a lot of ifs. So we're going to have to look at it on Tuesday before, well, let's see, when do they report? I'll tell you right now. I don't know if they report before the opening or after the close. Let's punch it out. It should tell us here. It looks like the close. It looks like the close, yes. I will know that for sure on Monday. So Wednesday afternoon, we're going to have to make a decision because we do know, and we might do something where we do pull a straddle. It's just very, very hard to make a big bet on an earnings. Somebody did last week. They did it with Target and they made 2,000% of their money. I mean, right. Beat that. So, but to answer your question, on a very short-term basis, we could have a positive trade. After that, we got big problems with Taiwan. We have so with the situation in Taiwan, they have, we don't have any chips. We don't make chips in this country. Intel is finally going back into the business. They started building a new factory at the beginning of the year. It's going to take them another year and a half before it's even done. So this is a big, big, big issue. And if China, and if this thing with China becomes more of a problem, God forbid if they invade Taiwan, the impact is going to be unbelievable. You think inflation's high now, that people have to buy through the nose to get chips for everything? I mean, Taiwan Semiconductor, TSM, this is a stock that, they're the ones they're the biggest chip. They provide like 25% of our chips. Taiwan, and we want that. We love that connection, but we have to build our own, and it's going to be 2 years before we do it. So this is a real, real, real big issue. And there are some people who think that China, people think that China's going to invade before the end of this year. I don't think that, but I'm not a geopolitical expert. So yes, this is something that I'm very, very care about. Now, but again, we can play both sides on a trading basis. Okay, the FXI that I talked about earlier, right? What happens if we get a short-term rally in China? Look at this here. I'm going to get this right here. See, it's off its lows from that. We made that great call, right? We had that great call in March down to here, and it rallied. It got right up to its 50-day, right near its 50-day moving average, and failed. Then it got right to its moving average at 50-day. The yellow line is its 50-day moving average. Okay, got right to it there, failed. Got right to it there, failed. Got right to it there, but didn't really fail much. It pulled back, but it didn't fail. Now it's testing it again. That is okay. And each one, I'm like, ooh, if this can break above its 50-day moving average, you can see it's not oversold, but it ain't overbought either. It breaks above its 50-day moving average, you're going to get a little bit of a squeeze there. So I'll be looking at in the end, and if it fails. So I think you're going to get a big move in the FXI in the next week or two. And I'm starting to think it's going to go to the upside, but I'm going to see which way it breaks. If it fails and we're starting to break down, we're going to buy puts. And we're not going to be doing this on Monday. It's going to be later this week or maybe the following week, or we're going to buy calls if it breaks out. And it's like, I'm going to let this market tell me what it's going to do next. Then we'll react. And then if it really runs up, then we'll start looking at make longer term bets, because on a fundamental basis, I don't like the situation for all of the reasons we just talked about, alluding to that semiconductor thing. But it's also, if the FXI breaks out, what about a stock like Alibaba? Okay, same type of thing. Okay. And now this one, it's the, you can see with a 50-day moving average, it's not as important because it's broken above it. But I just think if the FX, it will be, I'm sorry, I'm kind of stammering here, but let's get rid of these lines. I don't want to look at those lines right there. Boom, here we go. Lower high, lower low, lower high, lower low, lower high, lower low, equal high, lower low, lower high, lower, blah, 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 blah. Oh, wait a minute here. This was a higher low. We haven't had a higher low. Then we got one here. You could technically, it's a slight high, but it's basically another higher. In other words, this one, it held that level. What does it do now? If Alibaba breaks below 80, that's a big problem. If it breaks above 100, it's going to run. So I'm going to be watching, and then again, we'll go back and look at this. So we're always looking at technical analysis, all sorts of different things. Oops. And we're going to look at the MACD. What the heck is wrong here? Let me just, okay, it just froze up on me a second. This only takes a minute here. Here we go. Okay, I'm going to bring it back up. BABA equity. Remember that MACD I talked about with, golden cross, let's talk about golden cross. See here, now here, let's look at it again. Let me get rid of these moving averages, makes things busy. But look at this stock. Even though it's been going straight down, it's had some very nice rallies, okay? Look at this right here. Positive MACD cross, the white line above the red line. Nice little rally there, nice little rally. Again, doesn't look like much, but let's look at a percentage basis. Percentage basis, boop, that's 12%. 12% is a lot. And then, like I said, stock goes up 12% in just a few days, like it did in that instance. The options went up 700%. Again, a bunch of head fakes didn't quite get there. We got a confirmed positive cross. Look at that rally. Head fake here, it didn't happen. It looked like it was getting close. That's why you don't want to jump the gun. You don't want to jump the gun. That was a head fake, didn't happen. But then when we finally got the positive cross, again, it got a positive cross, but it wasn't a meaningful one. And the market, it kept going lower. When it finally became a meaningful one, boom, that's when it jumped. Same thing, a bunch of head fakes. We finally got the positive cross. It jumped. Here, this one, smaller one. It's just making a very mild cross here. If this becomes more meaningful, especially after making a higher low, we're going to be looking. We're not going to wait till it breaks above 100. We get a more meaningful positive cross on the MACD chart, and I'll zoom in on it for you so you can see it a little bit better. See, that becomes a bigger cross. We're going to jump into this stock and buy some calls. Even though I'm very, very cautious on it on a long-term basis, and I'll want to. This will be a short-term trade. We'll hold it for a couple of days, maybe a week or two at the most, and then we'll take another. And then we'll get out, move on, and look for another level probably to make a negative bet on it. But see how this goes with it. We want to take advantage of these things. So many people try to make short-term bets based on long-term fundamentals. It's what you want to look at is positioning, sentiment, technical analysis, and experience. And like I said, we've had a bunch of trades this year that work so well. And again, excuse me, I don't. Part of it is what I say. Why don't you do more complicated strategies? I just think I lose too many people. Again, I think we have an opportunity right now. We've had it all year. We continue to have it, I think, for the next year or two, that will, where people, individuals who are smart people, understand the risks involved. There's no question. Trading options are risky. Okay. So it's just, but you can follow my trades, not follow my trades, whatever you want to do. I just tell you what I'm doing, but I tell you why I'm doing it. So you'll learn why these things are, why we're doing things. Like I said, even though I was very negative on China on a fundamental basis, both intermediate term and long term, we made a bullish trade and it worked out beautifully. Those are the types of things we would do. And the Apple computer trade, here was a situation where I like the stock long term, but obviously it's a great company with unbelievable cash flow. And I knew it got knocked down for artificial reasons. We took advantage of it, even though the stock may have some problems. Now, Rodrigo talked, and here's just, again, another thing I want to talk about. People who've been on these seminars before are probably tired of me telling this one, but it's just such an easy thing. But back in here, I said, you got to sell Microsoft. You got to take profits. I mean, if you own it in your long-term 10-year, 20-year horizon, don't sell all of it, but you should sell some of it. Okay, boom. The stock is down 26%. The CEO, who is a very good CEO, Mr. Nadella, very, very good CEO, he has basically saved himself about $100 million. Okay, because what did he do? He sold $275 million worth of his personal holdings, half of his holdings here. Then he sold more here, a total of 2/3, $374 million worth of stock. Okay, and I said at the time, and I still say it, is that insiders don't sell that much, don't sell 2/3 of their holdings, especially in a stock that's averaged 33% gain each of the last 9 years, and the only bad year it had was still up 12%. Okay, so there was no reason. The only reason why insiders sell that much stock is because they think their stock is going to go down for a while and stay below that level for years. Now, I'm saying it's going to go down for years, but it's going to stay below that level. And he did nothing wrong. There's nothing unethical at all. He has turned that company back into the powerhouse it was when Bill Gates was running it. He's unbelievable. It's not, he just saw what was going on. The stock got too expensive. He's not the one he didn't lie and say, hey, we're going to do this, we're going to do that, we're going to do things that they're not going to do. He didn't cheat on their accounting practices. People just took it too high. They had too much liquidity. They know Microsoft's a great company, so they took it to a ridiculous level. He saw it. And I'm guessing he saw what the Fed was doing, and that those valuations would have to come down. So he said, I'm going to take a big chunk of my chips off the table. I was literally saying this Thanksgiving week right here when he said hit the tape. I started talking about it, and then I really started pounding the table 2 weeks later when it was announced he sold even more. And sure enough, he sold. I mean, it's just again, it's a great company, but sometimes the stocks of great companies can get way ahead of themselves. He's done nothing wrong. He's great. He will get more stock at the end of this year when his next year-end bonus comes around. So, and that's. But again, people heard me on other webinars know, as I said, in 1999, Goldman Sachs, all those partners, they sold their stock to the public. They were insiders, basically insider selling, and it's okay. There's nothing wrong with it. They told everybody what they're doing. It's perfectly open about it, but they saw what was going on in the marketplace. They went public in 1999, sold their shares to the public. The next year was 2000, the market topped out. Blackstone, not BlackRock, but Blackstone, the huge, wildly successful private equity firm, they went public in 2007. They sold at the top. The insiders, the partners sold at the top in summer 2007. 3 or 4 months later, the stock market topped in the end of because they saw the bubble. Same thing happened with Glencore. They were the big commodities trader. They sold it and went public in March of 2011. And May of 2011, 2 months later, the commodities market fell into an 8-year bear market. And Sam Zell, the great commercial real estate investor, he just sold it. He was a private company. He sold it to another company in a private sale right at the top of the bubble in real estate. This is what smart people do with tops. And I saw that and I said, this is going to be an important top, not just for Microsoft, but for the entire tech area. And so the people who have been listening to me have saved a lot of money by raising cash and making these trades. Again, these short-term trades we've been making are great, but I talk a lot about the longer-term things too, and that's what I've been saying. Well, I mean, if you've seen me on TV, I was on Bloomberg TV in London. I was in CNBC Asia and CNBC here in the U.S. on last Monday as well. And I was saying the same thing. I've been saying it for a while. Raise cash on bounces. I think we're going to get a bounce, a tradable bounce that we can get. I'm not quite sure yet, so I'm going to be very, very nimble. But over time, we've got to take advantage of this. Those who take advantage of it are going to, when the real bottom comes, we're going to have plenty of cash on hand, number one. But more importantly, we're also going to have the confidence to buy, because when the bottom comes, that's when the people have been losing. They begin saying, I've been waiting for the bounce. I've been waiting for the bounce. And, forget it. I give up. And then they sell at the exact wrong time. And then after that, they still, obviously, nobody oversells 100% of their stocks, or few people do. And then when the market bounces 10%, they go, oh, finally a bounce. And they sell more. That's what happened. I've said this before. From 2009 to 2012, people were selling. Mutual fund flows were going out, even though the market was going up, because people were saying, oh, I finally made some of my money back. I got to get out. It's the wrong thing. But we will be the ones who made money, and we'll be ones, okay, it bounced. We know the bottom's in. We know the worst is behind us. The market goes up 10%. While those people are selling, we're still buying. We bought at the bottom. We bought up here, and we buy it all the way up. And that's really where you make the money. That's where Warren Buffett has become a billionaire. When, buying when there's blood in the streets. But if you don't have any cash, how can you buy? Or if you haven't made any profits on the way down, how are you going to buy when there's blood? You don't have any money to buy when there's blood in the streets. Mr. Buffett has put some money to work, mostly in the energy area, but he still has huge amounts of cash. He no longer owns a record amount, but he still has hundreds of $200 billion of cash because he knows that this market has got further to fall. And when he does, he's going to swoop in and again be buying in a big way at the bottom. And it would be again, and we want to do the same thing. It's going to be like buying stocks hand over fist in 2003, in 2009, in 1933, whatever it might be. That's really what we're trying to do here.
Really quick, Matt, let me ask you, there's a lot of people out there that are calling for, a 20% drop on the markets and some sort of doomsday scenario, trying to stay positive here with the folks and everything, but like, how realistic is that? Do you think it's, we still have more to go?
Yes, I do. I think, again, like I said, I'm short term. We could have bounced at any time, and as I was saying earlier, we've seen bounces in every great bear market.
Right.
We've yet to price in the exit of the Fed, and which means that we have not even come close to pricing in a weaker economy, which we are going to get. And I strongly believe we're going to fall into recession. Goldman Sachs is saying there's a 35% of recession. Okay. That means they really think there's about an 85% because nobody ever said, nobody on Wall Street will tell you that we're going to fall into recession until we're already in it. They won't say more than 50% until they know we're already in it. And then they'll say, oh, well, yeah, because it's job security. You cannot run around telling people there are some economists who are calling for recession. Those guys work at colleges or universities, against like that. You won't find them at Goldman Sachs or Merrill.
All right. Okay.
It's just not good. No, again, they'll be, I'm cautious, but they always say, we'll see. We might see a recession next year, and because they it's just not good for job security, not good for the year-end bonus, and especially if you're wrong. If you call for a recession and you're wrong, oh my God, jeez.
Yeah, well, I mean, it's just like I'm not like a Harvard, MIT economist, but when I'm seeing people, real wages are down, costs are up, oil's up, food's up, insurance is everything's going up, and then let's just say the supply chain gets worse, then I just don't see how we're going to have a positive GDP. I just don't see, if we have that supply chain issue with China and we have all this stuff here, I don't see how the consumer is going to be buying left and right.
And it just doesn't seem like it's going to go away anytime soon. I mean, the one thing we'll be watching closely is in this energy sector is that do they move the, I've been very, very bullish on the energy sector since October of 2020. Everybody else jumped on the bandwagon much later than that. But I will be watching to see if these sanctions, they kind of take sanctions away and add tariffs. That will be different. That will give the flow of oil, of Russian oil, more of a chance to come in, and oil prices could come down, but I don't think they're going to come down. I mean, the thing is, if they come down and stabilize in the mid-90s, that's not good. That's still high inflation. That's the biggest thing that so many people are missing. They're like, oh, we're reached peak inflation, so we're all set. It's like, no. Okay. And they're saying, well, we have these comparisons. You know something? Rent prices are starting to come down. Used car prices are starting to come down. I'm like, you guys are looking at textbooks. People don't give a damn about that, okay? We're talking about two things, food and energy prices. You got to fill up your gas tank, and you got to heat your home and run your air conditioning, and you got to put food on the table. If that costs you a lot more than it used to, which it is, and it looks like that's going to stay, it doesn't matter if the official numbers can come down. It doesn't matter. I lived through the 1970s. I mean, I was in junior high school and high school in the 1970s. Okay, I remember it. And my father had a job to the fine. We were fine. Okay, so I'm not saying, oh my gosh, no, we were fine. But I saw what happened to the city of New York, and just what the people had less money to spend. 64% of the people in this country live paycheck to paycheck. Okay. Even if the job's plentiful, it doesn't matter. They can't afford discretionary spending. We're 70% of the economy is the consumer. If the consumer is going to slow, the economy is going to slow. Earnings going to slow. And it's okay. We need to get what's going on right now is painful, but it's normal. I hate to say it, it's normal. It's normal and it's healthy for the long term. But the point is, like, most people on Wall Street are sitting there going, we're going to help you weather this storm. I don't want to weather anything. I want to profit from it. And I'm not profiting from anybody else's pain, because I'm telling anybody who's willing to listen. I tell them on TV. I tell them in these webinars. I tell them in my market letters. I tell them in the chat room. Okay, I want you to benefit from this. So I'm not just hiding it. Okay, I'm not just like, sitting here alone, making money on the side while everybody else burns. Okay, I'm trying to let as many people as possible take advantage of this. And you know, I don't want to get too much into this here. Again, the point is, I'm not one of those doomsdayers saying, you know, the U.S. is going to go to, you know, the economy is going to go to zero. We're going to overthrow the government. We're going to get through it like we always do. It's going to be painful, and it's going to be social. There's going to be social disruption, things like that. But we're going to get through it. So I'm not looking for the end of the world here at all. But I'm just saying that it was just like the same thing when people back when Tesla was trading at its highs earlier this year, and I said the stock was going to trade below 1,000. That's going, what are you, nuts? Don't bet against Elon Musk. And I'm like, I'm not betting against Elon Musk. I'm betting against the stock. I'm not betting against Elon Musk. I'm not betting against Tesla. I'm betting against the investors who took the stock way too high. And sure enough, the stock went way. I mean, this stock was way above 1,000. They were like, oh, you're out of your freaking mind. There's no way that that Tesla could trade. I mean, I'm going, how could you possibly? And me, I was like, how could you possibly think that there's no way? You see, it was at $1,200 here. I was saying, how could you think that there's no way it could drop below 1,000 if it's dropped by 20 to 60% dozens of times in the last decade?
That's what I was talking about when I was telling you that, like, you are honest about your true opinion of a stock, where it's not well, you know what I mean, right?
And my point was, and I was saying, and the guy was saying, well, the stock's going to 5,000. I said, yeah, maybe it is. And I said, there's a good chance it is. But that doesn't mean it can't go to 800 first. And now it's, you know, it's below 700 now. And people thought I was out of my mind. There was another person said, Advanced Micro Devices, great company, great management. And they're saying, no way. I said, the stock's going below 100. The stock was like 120. And it was like, laugh, ha ha. You're basically call me an idiot. And I was like, no. And of course, you know, not only did it fall below 100, it fell 14% below 100. And we made money right here. When it broke, I said, this thing breaks below 100, you got to buy the puts. And there were several people in the chat room did that. See, that's Advanced Micro Devices. And sure enough, way up here, I said, it's going below. It actually wasn't here before. And they thought I was out of my mind. I think it'd go under 100. They thought I was out of my mind when I said the stock, yeah, S&P could go below 4,000. And, you know, it's not way below 4,000, but it's certainly below. I mean, literally, it's human nature to take what happened in 2021 and just extrapolate it out. And I just, maybe because I wasn't a history major in college, but I did take a lot of history because I enjoy history. I wasn't even a history minor, but I did take a lot of history courses, both financial and just general history. And so I look at the bit longer term picture, and I just know how human nature works. They extrapolate. Now, at some point, when we get towards the bottom, human nature is going to do the opposite. They're going to say the world's coming to an end. You got to sell everything. We're 100% cash, and there'll be, Time magazine or whatever a magazine was saying, at the bottom of the bear market of the 1970s, there was a big article on Business Week that said the death of equities, the death of stocks. People should never buy stocks again.
I think we need to put you on the cover of Time magazine now. Have Matt Maley there in the chat.
Anyway, but yeah, we just, I've been rambling away here for 2 hours, although we had that break there in the middle, and I apologize again for that. But Rodrigo, I would like to just, if people want to go through a few tickers before we wrap things up, I hopefully you've gotten a good idea of how passionate I am about the market. I'm not making money by churning your account. I go through the trades. I'm doing the trade. and if you make money, if I make money, you'll make money. And when I lose money, when you lose money, which will happen, there'll be some trades that don't work. I will be losing money too. I'm not, but the thing is, my portfolio, my overall portfolio is up overall, and that's the big bucket, and everything else is up over 20%. My trading account is up many hundreds of percent this year.
Trading account. We're talking about the chat room.
Chat room, we're up huge. I mean, I don't know the exact number, but and again, we have to, because we want to define it more, because it's hard, because if you count every single trade, it's like there's a number of small trades I've done, and you can't count them equally, because I said these are tiny trades. We lost a little money. Okay, no problem. We've had let's say a lot. We've had several of those, and they say, well, you can't.
Right, because you scale into these options. So if you scale in a little piece and you close it, yeah, I mean, it makes total sense. Well, hey, look, that's why
my trading account is up several hundred%. The trading part of my portfolio is up several hundred% this year. And more than 200. I get a lot more than 200.
Yeah,
and every single trade I've done has been put in the chat room. Everyone.
Yeah, and I've received similar feedback from some traders that have, done doubled or tripled the account. But obviously, I have to be careful about saying that, because not every, because some people are there all day. They're there following. Some people are there just half an hour, and they just make a couple trades. So, everybody's going to be different there. Yeah.
Yeah, but we're in there, and as you said, we're going to have an alarm. If every time I do a trade, you actually get a little alarm, and you can check it out. And that's the thing is, if I do a trade and you're at work, and you can't be watching it all day long, that's fine. You go in and you say, oh, I see there's an alert here. I'm going to finish up what I'm doing, and 10 minutes later, I'm going to go back in and check the chat room, because I've got a little break here. And then they go into the chat room and say, okay, Matt, I see that you did this. Is it still a good trade? And I'll say yes or no. Okay, because it might, in most cases, if it's, depending on how, maybe it's been 2 hours, it still might be a very good trade. Could very easily still be a good trade. But if it's not still a good trade, I'll say, we've made some nice money. I took the profit, and you don't want to chase it up here. Most of the profit's already there. But that's, again, that's the type of thing we're trying to work on. But if there's again, I don't know, it's a Sunday afternoon, people want to go watch the PGA Championship, where it's like 100 degrees outside here. So but I would like to, if there are some, if you want to do some tickers and some stuff,
right,
and ask any other, or answer any other questions, just general questions, I'll be more than happy to do that before we wrap it up for the day.
Okay, all right. So we have to give, of course, a shout out here to the newest family member. You know how we are here. Who is this? Let's see. Christ of Fitness. Damn, Christ of Fitness. Welcome to.
I like that.
All right, we got the Christ of Fitness here, part of the chat room. Welcome, sir. We're going to go over a couple stocks really quick. I did want to mention, Matt, we have been covering large caps, mid caps, but you also, there have been some other trades that are, I guess small caps, right? That traders bring up to you, right? It's not just Apple, Tesla.
Mulan was one of the first ones at 90 or 80-90 cent stock. I think it was 88, whatever. And you were the one who highlighted it. And the stock's breaking out. Let's jump on board. And the stock is, again, I don't usually go into too many penny stocks because I'm not, again, the stocks that are trading at 3 or 4 pennies, that's not, but if it's a real company that, small cap, large cap, I don't care. But my point is, the biggest point is to realize that we're not just, and if I don't know, I just say I don't know. Or if I'm neutral, I just say I'm neutral. But there's times I sit there and go, I just don't know this company at all. It's only been public for 6 months, so I can't really look at its chart. I'm going to be honest. If I don't know, I just don't know. And there's some days where we're actively trading because a lot's going on. But like I said, we may come down in August and have a day, a couple of days where we do 1 or 2 trades because there's just not much going on. I'm not here to do things just to do them. Sometimes the best thing to do is just wait. But again, on those, my point was that you don't have to sit there and try to buy the 50-cent stock that's going to become the next Microsoft. Those are so far and few between. You can trade a lot of other stocks, the big cap names, small cap names, mid cap names, whatever. Especially, and one of the reasons why I like those bigger cap names, and people are like, well, I'm not gonna. Apple's already made all their money. It's a good long-term holder, but it's never gonna make me. I'm not gonna be able to really make a 5 times my money. And it's like, well, actually, you can in the options market, and because they have weekly options. Some of those really small cap names, they don't have any options, much less weekly options. So, but we try to, we're looking for what works. And like I said, it doesn't work. Like there have been times that somebody asked me, hey, one time I came up with when I said Akamai. I was like, oh, this looks like it'd be a real good buy here. I hadn't even looked at their options are very illiquid. So I was like, oops, sorry. But sometimes you sit there and say, it looks like a great idea, but buy the stock, don't buy the options. They're just not liquid enough. The stock could, the option could double, but by the time you find the liquidity to sell it, you will have lost money. So, so we play around with that.
Yeah, I mean, that's why I do like that you give clear entries and exits. It's not hypothetical. There's a lot of bad stuff out there, I know, but I do like the clear entries and exits.
No pumping and dumping.
And that's the thing, like when you're new, you really, I mean, look, let's be real, guys, right? That's the definition of hand holding, right? Like you're giving you clear entries and exits. This is what I'm buying. This is what I'm selling. Like that is as easy as could be to follow. It's not maybe here, maybe there, ask me later, ask me in 2 weeks or so I think that's good. So we have a lot of stocks here, Matt. Let's rip right through these. All right. So first one, and feel free to comment on whatever you want on these stocks. Sure. We have Twitter for regulatory. Is this?
Yeah, I'm gonna. Here it said if I don't have a. Well, it was funny when I was asked on it before when the stock was. I guess it was right in here, whatever. I said I'm just staying. I mean, personally, I'm staying. I'm not going to trade the stock. It's just too speculative for me. Now, stock's getting oversold, but it's not. It's gonna trade on tweets. It's too hard for me to figure out the way Elon Musk is going to tweet. And am I going to really bet against Elon Musk? I mean, betting against Elon Musk has not been a very profitable trade. But betting with him right now, I mean, he was on the cover of Barron's magazine, and guess what? This stock has gone straight down since then. Tesla stocks come straight down since then. He's going to do fine, but I hate to say it for Twitter right now. If it breaks back above 40, but it's all going to be on this takeover speculation, and that's for the what they call risk arbitrageurs to do. It's not really. It's going to be based on news, not on its fundamentals and not on its technicals. It's going to be based on the tweets and news that come out of that. So for me, I'm staying away from the stock. Go ahead and if it breaks, if it breaks back above 40. That should be positive on a technical basis, but it's really going to depend on what Musk happens with this takeover. So
and I do want to mention here,
away from.
I just want to mention really quickly before we get on more stocks here. All these stocks, Matt's basically like taking mental notes of, because if there is a trade that will be triggered and it's not triggered right now, depending on the next week's price action, Matt, if Matt thinks there's a trade to be made, he'll follow up in the chat room. So all you chat members that are here, just know that this is good for you guys, for the chat members. We're literally throwing trade ideas to Matt for the watch list of the group. Okay, let's get it on here to the next one. We got Oxy, OXY.
Yeah. Hold on a second, Mike. Okay, now here's one that I love on a long-term basis because I like energy stocks. And of course, Warren Buffett's bought a lot of it. And so this is the one right now that if the market rallies, you could see oil prices come in a little bit. And so look at this. So I'm looking right here. This yellow line is the 50-day moving average. I just love this stock. Look at the chart. Well, first of all, I love it because I'm very bullish on crude oil. I think it will hold up. Crude oil doesn't have to rally to 150 to take these energy stocks higher. Okay, they're still relatively cheap. Okay, and Oxy is also very leveraged to the price of oil, and I think oil prices will. I mean, Goldman Sachs was out last week. You're talking about the guy who's been spot on in terms of commodities has been the head of the head of commodities at Goldman Sachs. Jeff, gosh, I'm forgetting his last name now, but he's been good for years, and he's been spot on this. He's still looking for $125 oil this summer. So it should go higher. If for some reason it pulls back, my point is I like the stock. I'd be okay buying it here. But see how it gets down to that yellow line. It's 50-day moving average. Every time it does, it bounces. Okay, so if it gets down to the $60 level, for some reason, if oil comes down, the stock comes down, that's going to be a good place to get more aggressive. It's okay to buy it now. and but here, if it gets down here, that's when you might look at buying some of the calls and adding common stock to it as well. But this stock, again, you see higher high, higher low, higher high, higher low, another higher high, mini, this one was actually a very mild lower low, but it held its 50-day moving average, so it's still okay. And that's what we watch it. And you see it's near overbought, but not grossly so. So yeah, I definitely like that, and I like the energy sector overall.
Okay, all right. So Matt likes the energy sector, and let's go. So then let's get a couple from the YouTube chat there. We have Keith Sayers with Amazon. I know we talked about this one right before that massive dump in one of these sessions that we do.
Right. The Amazon. Now the thing about Amazon is it's been dead money for a long time, and so what we've had though, and whoops, I went too far back, but let me just. But I just want to get some of these lines out of here. Okay. See, got stuck in that sideways range. The rest of the market was rallying. It kind of tried to poke ahead of it. But here, I'm gonna tighten it up so you can see it a little bit better. There we go. But see this selling here? This is, in my opinion, what has happened here is all of these, it used to be a huge holding for institutional holders because they made so much money off it, right? But they held on it for 2 years in a big way, and it was just dead money. It's finally they said, I got to get out of this stock. It's killing my performance. It's too much of my portfolio. So a lot of these mutual funds and other institutional holders, this here, because you think, well, the stock hadn't rallied like the other ones. It should have held up better because it wasn't as extended as some of the other stocks. But it was just because too many institutions owned too much, and they finally dumped it. So you think, okay, now. Is anybody going to predict that Amazon's going out of business? I think we're all pretty safe in thinking that it's not going out of business anytime soon. This is a stock. Okay, now this is a great tutorial for technical analysis. Great example here. We're going to go 2006. Okay, now look at this. This is the weekly chart. Going all the way back to 2006. Let me get some of this. Now, obviously, great run here. Look at the weekly RSI chart. Look at this. Amazon is now more oversold than it was at the lows of the financial crisis. That's just unbelievable to me. This stock is going to be, long-term buyers should seriously look at this stock. Okay? You should be, go ahead and be buying this. Buying this now, you don't have to back up the truck because the overall market can come down further. But if you have those monthly things that you put into your 401k or whatever, put some of it, a little bit into Amazon every year, every month for the rest of this year. And it might go down a little bit, but I'm telling you, 2 years from now and 10 years from now, you'll love it. But here is another great example. Okay, so the RSI is incredibly oversold, right? Okay, it's incredibly oversold. Most oversold it's been basically ever, okay? But also, look at it. See how that level here at just above 2,000, about 2,100, see how that was key resistance? It got up to it in 2018, got up to it in 2019, got up to it in 2020, early 2000, couldn't break it. And when it finally broke it, it took off. So it was incredibly important resistance. And when it broke that resistance, it took off. Now that, as you say, old resistance becomes new support. So this is an incredibly good support. So it's testing an incredibly important support level. And somebody say, well, geez, if it's testing incredibly important support level, and if it breaks that level, it's in big trouble. Yes, but it's testing that incredibly important support level at a time where it's incredibly oversold. So if the market bounced next week, the thing I get frustrated about is that the stock splits on June 3rd, okay? So it's still because at $2,100, those options are expensive to buy. As soon as that stock splits, they're going to be a much better one to try to buy. But if this stock can hold around here and we can finally see it bounce, boy, this is one we're going to play from the buy side. So they have a lot. They have new CEO. The stock is down a lot, but they're not going out of business. And the guy, remember, the guy who took over from Bezos was the guy who started their cloud business. And as Jeff Bezos said this week, he said, remember everybody laughed at us when we started that cloud business? Now it's our biggest moneymaker. Well, guess what? The guy who started that business is the one running Amazon right now. And you say, well, he's done a lousy job because the stock was like, he's doing what Bezos did. He's like, I don't care about the stock. I'll let the stock take care of itself over time. I'm going to take care of the business. I think that's what he's doing. And I think this is going to be an unbelievable, great buying. So start buying it now. For options traders, I'm going to wait until June. And hopefully the stock will stay down here. If you do want to play in it, and I will talk about it next week in the chat room if it looks like a good buy. But again, this is the one that's like, wait a minute. Most people now are saying, oh, forget Amazon. They're old news. That's when you buy. It's again, if I really thought they were old news and Amazon wasn't good. I mean, when was the last time you didn't use Amazon in the line? I mean, everybody still uses Amazon all the time. So this is a good one. This is a good one. You know how bearish I am. This is not one. I'm not going to be shorting this stock at all. I mean, if it gets overbought on a very short-term basis later this summer on a big bounce, maybe we will. But other than that, this is a great long-term holding. This is a gift.
Okay. All right. Then we have Google next. Talked about this one also.
And another great company. But just because it was a great company didn't mean that the stock was not, and it wasn't a good stock at the height this year. And it's one of the stocks that I talked about. And again, this one though, it's down. It's not down and out yet. Its RSI is not. Oh, you know what? I should have shown you the Amazon. The Bollinger Bands charts are also quite extended. I didn't go into that, but let's just look at the weekly. See, it's not wildly oversold. Let's go. Google is, but see on its weekly, see how it's getting down near to as oversold as it was back in 2020, and basically that was back in 2011. So boy, this is another one it's getting down to a level that we'll want to, again, $2,100 stock, so its options are expensive, but this is one, same type of thing. You want to be the rest of this year. Don't back up the truck because the market's kind of a tough year. But this is one, it was just a small amount. And maybe for the next 2 years, every month, put a little bit of money into Google, put a little bit of money into Google, put a little money into Amazon. Okay. These two companies are not going away. Netflix is going to have its ups and downs. These two companies are not for the time being. I don't know where they'll be. I always tell my kids, it's like, you're not going to believe this, but someday Apple Computer is going to go out of business. And it'll probably be in your lifetime. Like, oh, what are you talking about? I was like, how many companies when I was a kid that were great companies that are now out of business or been bought out or whatever. But that's not happening anytime soon with these guys. It may happen long after I'm gone, but these guys their prospects are still unbelievably good, and Google's is one of those. So on a long-term basis, I want to buy it. On a short-term basis, if the market looks good, we'll look at these calls. Again, the calls are going to be expensive, so I'm looking at other ones. And he's talking about these expensive things. What's the difference? And we look at J.P. Morgan. Whenever I look for a bounce, people ask, should we buy J.P. Morgan? And that's a good question to ask. Jamie Dimon's one of the most powerful businessman in the world, incredibly smart. The stock is down. It's kind of down and out. And it's a $117 stock. Let's look at its weekly RSI chart. Again, I don't look only at weekly RSI charts, but see how it's oversold here, okay? But look at Bank of America, also an incredibly well-run company. I happen to know, see here, I'm just going to look at here. See, same type of thing. I happen to know Brian Moynihan. I don't pretend to be his best friend, but I know him well enough to say hi, and we chat with each other every once in a while. When I see him, he actually lives up here in the Boston area, even though he spends a lot of time, obviously, in New York and in North Carolina. And our kids played baseball together one summer. He was like an assistant coach on the team. It was back long before he was a CEO. But you can see, you go back, see, and that's also testing its 200-week moving average. Okay, that's a good support level on the that's the purple line there. 200-week moving average, oversold, not crazy oversold, but oversold, and it's a $32 stock. So if you buy their options, pull up the options. See? So if you want to buy in line, it's they say $34, cost you 45 cents. 45 cents. Okay. JP Morgan Whoops, JP Morgan. You look at the JP Morgan options because it's a higher price stock. Okay, you buy a stock's last sale is 117. So let's look at the 117. Those are $2.56. It's a lot more money. So so that's why I look at, again, that's why I try to cheer you, say, they're both probably going to rally nicely here. But you say, well, on a relative basis, well, we'll go percentage, and I'm like, but it's always better because if you can buy 10 options or 100 options, whatever it happens to be, instead of just one, it gives you more balance. You can figure out what you're going to do. In other words, you can sell. Geez, I've seen a nice move here. My options have doubled. Okay, so I spent $100. Now it's worth $200. If I own 10 options, I can sell half of 5. Okay, so geez, I just sold 5. So that means the $100 I put in is covered. I cannot lose money. If the stock goes to 0 tomorrow by noontime, I'll still come out flat. So you can buy more of them, and you can say, now I can let it run as much as I want. I don't want to be nervous. If you only own one option, you got to make a decision, out or in, or out. Well, it's out up 100%. I got to get out. I can't. That's too much. That's such a great move. I'm just going to hold on to it. So, but again, it just goes into what we're trying to do in this chat room. Why we'd look at a Bank of America over JP Morgan. Sophisticated investors and institutional investors, they got more money than they know what to do with. They can play whatever they want in either option. But for us on the individual side, I think that Bank of America is the better play. But I guess I hope I answered that question. I got
Right.
lost a tangent there. But Google is a great company, and it's one where if the overall market gets hit harder, which I think it will, the stock will go down. That's why I'm saying just buy a little each month. Don't back up the trend.
Then we have from one of our newest members here, Donna, Carnival Cruise Lines, CCL. And what's your take on that?
Well,
So since we are doing the CCL, right? Just hit the recovery, hit all that reopening kind of stuff.
Yeah, exactly. This is one of the things is that boy, the stock has really just come back down. It's really, on a technical side, it doesn't. Again, it's oversold, so I guess it's okay. But my feeling is that all these cruise lines and airlines and these things. I mean, I flew in whatever, a month or so ago, and it cost me 3 times what I would normally expect to pay. I was just going down south. I wasn't going very far. It wasn't like I was going to Hawaii or Europe or someplace. And it was just unbelievable. But people were willing to pay it. Why? Because it was a pent up demand. People were tired of being cooped up, and they go, well, they weren't anywhere near as cooped up as they were the previous winter. Of course not. But they were still cooped up, and they're still sick and tired of it because it was the second time. So they're like, I don't care where we go. We're going for vacation for the kids' spring break, or we're going on a long weekend, getting a babysitter for the kids just to get away, because we are. And I firmly believe that once, as this, and we're already starting to see it, as this pent-up demand diminishes, these bookings are going to drop significantly in the second half of the year, and we're already seeing signs of that. And you can see just the way the stock's trading. I mean, this spring, and people say, "Oh, this looks really great." Well, now again, same thing. That $15 level on Carnival Cruise, that was key support. Now it's key resistance. We're going to see it broke below it. It got right up to it. So, I mean, it's oversold, so maybe the stock is okay. But I believe that the economy is going to weaken. That's going to leave less discretionary spending for individuals. And that's going to be, I think, the money that people spent. And again, they've already spent it. If summer vacations are going to stay in place. When people start looking at next fall and next winter and next spring and booking out, those bookings, I think, are going to be way down. It's just the consumers pulling in their horns. It seems fairly obvious to me. And we got that was exacerbated last week or not exacerbated, it was highlighted by Target, Walmart, and other retailers. So this is one I'm afraid I'm going to stay away from for a while until we get better clarity. But this is going to be one that people love cruises, and so at some point this year it's going to be a great buy. I just don't think it's there yet.
Okay. All right. Interesting there. And let's see what else we have here. Quick question here. Do you think that we can have stagflation and a recession at the same time?
Well, yes. I mean, Yeah, I mean, we're already in stagflation. And it's really when you're in stagflation is a recession. You know, you can go because technically recession's 2 quarters of down GDP in a row. Whatever. I mean, it's kind of like a bear market. You know, we missed a bear market last week because the S&P was down 20% midday Friday, but it bounced. Come on, we're in a bear market. That's just ridiculous. Yes, the Nasdaq's down 26%. It's a bear market, okay? And so stagflation is worse than a recession because in many ways, because the inflation is caused by too much supply. Inflation is good when it's mild, and the reason why usually when it's mild is because it's demand driven. People have better jobs, people are getting paid more money, and so they can afford those higher prices. And those higher prices aren't much higher, 2 or 3%, right? What happens is supply driven which is causes stagflation, is that instead of people having more money, they have the same amount of money, but prices are going up. And so that's stagflation. You have inflation with a slower, so it's self-fulfilling. It's like, I'm not making any more money to pay those higher prices, so I've got to pay it to buy my food and energy. I'll pay less to go to the store, so the economy starts to go down, and it causes the stock market to go down. I'm sorry, this causes the economy to weaken. And again, this is what happened during OPEC. This is what happened in the 1970s. I don't know why they don't talk about more and they don't avoid it, but they should talk about it more on the financial news networks, because that was what happened. What's happening then is exactly what's happening now. Maybe it won't be as bad, but in the 1970s, we had OPEC. They came in and they decided, we want to make more money, so we're going to stop shipping all our oil overseas. Okay, so we're going to really, it was an embargo, you know, the OPEC embargo. And so oil prices shot through the roof, and especially back then, we were more dependent on fossil fuels than we are now, even though we're still very dependent on them. And that's what caused it. That's what caused it. They provided much less oil. There was a much smaller supply of oil. That's why the prices went up, not because demand went up. And so that's what caused the stagflation. The same thing's happening now. It's because of the supply chain issues and because of the sanctions on Russia. Is causing food and energy prices to skyrocket. And this war is not just a short war; it's a war of attrition, and that's going to keep those prices up for a while. So I think we're headed there. I think we're headed for a second. I'm hoping it's not going to be a deep recession. We'll just have to see. But yeah, I think that's what we're headed for. I think in many ways we're already there.
And I know that a lot of people have been trying to use the unemployment has been somewhat, I guess, flat or something like that. Where do you think? I think we have some unemployment numbers coming up this week. Where do you think overall? Because here's the thing, man. Listen to the earnings. Look at these calls. Fortune 500 companies. Basically, I think at one point they're just going to have to slash cost. Netflix did some of that.
Right.
I think that's going to become a bigger.
Well, Airbnb and Google have done the same thing, where if they have not said they're going to lay off people like Netflix have, but they've either hinted towards laying off people or do it through attrition. In other words, people would leave on their own. They won't hire somebody to replace them, or just have hiring freezes. And we're starting to see some of these technology companies do that. Facebook's kind of is doing the same thing. So we're already seeing it. There are still a lot of jobs out there. So it's not a real it's going to be employment emergency or anything like that, because there are jobs, but just there's not a lot of good jobs. And we have some of these, when these technology companies start talking about hiring freezes and layoffs, that shows that the economy is going to slow. In other words, those people, if they want to, can go get another job, but it might be working at McDonald's, but it isn't paying a lot of money. So the unemployment rate may not go up all that much, but the employment picture is going to be tougher. And again, when you get really good companies like Facebook has had its problems, but it's still a very, very thriving company. And Airbnb doing very well. Google talking about these things. Netflix, we know why they're laying off people. They do have some problems there. But again, if it's happening to companies that are that good, what about the companies that aren't as good? It's going to be
small companies and
yeah.
Right. And that's the thing, right? You don't hear a lot about that stuff, man. But What I do like, Matt, is that really in the chat room, you pretty much lay it all out there, right, to the folks. It becomes a great learning experience. We are going through a very interesting moment in the market history, in history in general, right? And the fact that you are there breaking it down with them and profiting from the stuff where it's like, yeah, I lived through it and I actually made like some good money with calls and puts. That's really, I guess, the best you can get out of it, I think, at this point.
Right. It's an unbelievable time in the marketplace. It's a unique time. And I think it's going to be, I think it's going to last at least a year or long. I think it's last probably a couple of years. And you look at a guy like Dan Niles. He's one of the best technology hedge fund managers, and he's saying, this, this is going to last for at least a year, if not two. It's a deleveraging process that we're going through right now. It takes time. If you want to get leveraged, you want the deleveraging. We don't want the. That's the whole thing. Is that the Fed knows that they go through the deleveraging process quickly, then we have a crash and we have a deep recession. So we do it gradually, and they kind of, that's why they keep talking about. That he came out on Friday saying, well, we'll front end load now. That means front end load our rate hikes now. That means we'll actually probably cut them next year. They're trying to make it a gradual downward. So because they know what has to happen. They know the market has to go down, and there's no way they don't know that. Okay, and they're admitting that for them to be able to get a soft landing is very low chance. Okay, they know this is going to happen. They want it to be a little bit more gradual, so that it doesn't all happen at once. And then at some point we'll see a nice bottom, but it'll be a while, and we've already been able to take advantage of both directions in just the last 5 months. I think we're going to be doing it for another 12 to 18 months at least, and then after that we can go. We'll still have a lot of great opportunities. They'll just be much more on the buy side once we get through this bear market.
Yeah, I guess, man, this is probably the craziest time, but crazy means volatile, and that's good in the chat room, right? I guess if you want to put it on the trading perspective side, right?
Right, exactly. Volatility is what makes markets. And so we're 3:30 here, so I'll probably just kind of wrap up here. But just to say that thanks so much again. I apologize to people for that little hiccup we had there with the Bloomberg. And again, I must have hit a wrong button or something, but we got it back on. And it's just an incredibly exciting time. I think next week's going to be a very, very interesting week. It's funny, I've said that in other weeks, and my wife hears me. She goes, Matt, you can't say that next week's going to be an interesting week every week. And I go, honey, every week has been. And she's like, okay, you're right. So it's going to be another wild week next week. And really through the summer, because we get into June, that's when you get, that's when I start to worry about, we're going to finally start to see these companies and these analysts finally lower their estimates and getting ready for the next earnings season that starts at the beginning of July. And we start to get those downgrades and those lowering of earnings estimates. This market's going to see a lot of volatility. You saw what happened in Target last week and in Walmart last week. We're going to see a lot more of that, and those create unbelievably great money-making opportunities. So thanks so much for everybody for listening today, and please stay on. I know Rodrigo's got some things he wants to show you a little bit, but it's an exciting time in the marketplace. It's going to be a very painful time for a lot of people, and I'm just trying to help people be not painful. I'm trying to help people not just weather this storm, but profit from it. And so far we have, and I'm really looking to. It really looks like we can be able to continue. We should be able to do that, and especially because we have so many different people giving their opinions. And believe me, I don't pretend to know everything. And boy, there's stuff that I see how many times I say, hey, that's a great point. I didn't think of that, and then I'll extrapolate it out to other things. But anyway, for those who joined, thanks so much, and we're looking forward to seeing you next week. Those who are considering it, I hope you will. I mean, again, it's a money back guarantee, but we're just here to, again, in the years past, we've gone through this volatility. The only ones who ever made money were the big institutions, and now it's the time for the rest of us to make money in this time frame. And I think this chat room is a place where it can help you do that. Thanks a lot, Rodrigo. We'll talk to you and see everybody on the chat.
Yeah, I'll see you tomorrow in the chat room. Let's go. All right, guys, there you go. Matt Maley, Chief Market Strategist at Miller Tabak and lead trader at the Benzinga Stock Picks Inner Circle chat room. Don't get confused. It's called Stock Picks Inner Circle chat room, but we're trading options. And of course, you can ask about any stock that you want, long-term, hold, swing, whatever it is you want to do. Even if you want to do other sorts of trades, like, hey Matt, I want to do a credit call spread or that sort of stuff, you can ask him. But for the most part, we're focusing on trading, just buying calls, buying puts. But you can ask him anything, right? That's the benefit, right? The added benefit, including Bitcoin stuff. So, okay, really quick, guys, how the chat room works. Donna, everybody here that joined, Christ of Fitness, Roy, really quick here, right? So this is the chat room, how it's going to look if you do open it on a window. And you'll see more importantly, right, the two channels, right? So the inner circle chat is where everybody there is talking, all the members, including Matt, sharing trade ideas, research. I don't know, Derek has shared something here, a sell on, I don't know what stock this is. But everybody's sharing their trade ideas, together as a group. And Matt is also commenting there, right? It's a team. Remember, it's a team. There's about 100 people in this chat room. We haven't gotten to the point where we have to cap the size. I don't think we're there yet, to be honest. So it's still really, it has that, family owned, family operated kind of feel to it, right? And so this is where you're going to hang out the whole day, right? David, this is the guy that made like 10x on, I don't know if it was TQQQ or SQQQ. David, if you are watching the stream on YouTube, let me know which one it was. But that was a pretty nice trade. I believe this was the same David that came into the YouTube. But David's been there for a while. I do know that. And the second part, guys, more importantly, right, when you come here to the second channel, you see that it says Matt's important messages. So that's where Matt is posting entries, exits, market commentary, updates, that sort of stuff right here. Timestamps, so important, right? And what is he doing? Selling the rest of my SQQQ May 20 $59 calls right here. Okay, that was Wednesday. That was the day that I made 180% on some calls calls on SQQQ. Again, I really use Matt's chat room not just as a temperature check, how he's feeling about the market, but I also use it like to actually make the trades that he's putting out there. I've been trading his stuff for about 1.5 years. He's called every correction on point, the past ones that we have, including this one, which is more than a correction. He's been consistently accurate. I'll put it to you that way. He's been consistently accurate with the macro and even with the micros as well. So more importantly, trading the macro, right? I guess you could put it that way. But you do something for 40 years, and I'm pretty sure you're going to be very good at it, right? I hope so. So in this Matt's important messages, you see that everything that comes to trading, entries, exits, is going to be in this chat room. Now, the other thing are the sound alerts that I was telling you guys about. You have this window open. That's all you need to have. Really, that's all you need to have to make this kind of money with Matt. Have the windows open, and you can put the sound alerts here, right? You can have either no alerts, right? I mean, if you're there the whole day. I know the people that have been doing very well in the chat room, they've reached out to me. They've told me a little bit about their trades. I've asked them like, hey man, like, how do you use it, right? Do you use it this way, just at certain times of the day? And look, the people that are making like hundreds and hundreds of percent in this chat room, they're there all day because they don't want to miss any single thing that comes out of Matt Maley's mouth at all. The market is so volatile at this point that you really just can't kind of put it out. I mean, really, you shouldn't put an options trade and just go out for a walk and forget about it, right? These are, you're trading, right? That's, I would say, kind of irresponsible in a sense, right? Unless you have that mobile, right? Which you can do that. You can pull this app on your phone or laptop anywhere. I would really suggest to be in the chat room, or at least have it open, or have it somewhere in your near vicinity of monitors that you can see when Matt is posting an entry or an exit. Why? Because you do want to get max profits and the minimum amount of losses. That's really why I suggest that you do it that way. But not only that, that's really how the people that are very successful in the chat room are using it. And that's what I'm bringing to you guys here, that you're trying it, right? So if you do want to put alerts just for one of them, you can do that. Let me show you. You just have to click individually on each one. And if you see the bell is yellow, that means that, you're good to go. You do get that sound alert. PE, good question. Well, Matt is focused specifically on trading the volatility, right? So buying calls and buying puts. We're not really focused on doing spreads or butterflies or none of that stuff. We're trading the volatility. And really, that is the only type of trade with options that's going to give you that sort of return. You're not going to do that with I mean, percentage wise, right? We're talking percentage wise. You see those 600, 400%, 100%, that sort of stuff. Like, I mean, that's the kind of stuff that you'll get with calls and puts, trading the volatility. You don't have to be trading meme stocks to be getting those sort of returns. Like, that's something that I didn't really understand at first. But then once I started trading with Matt and how he uses the stuff, I mean, these contracts are like $1 around $1 each. You know, it's like $100 a lot. So you can really get some small positions in this. Doggy needs good home. What's up, brother? What's going on? It was so he's okay. So I think you're in the chat room then, but to know this, but basically, Doggy needs good home. I think you signed up here in one of these sessions, but it was SQQQ for David, Tiffany and about 5 others made 4,000 to 6,000% on the TGT target puts. It was a group effort YOLO. Next day, Tiffany made bank on Ross Stores put. I didn't take the trade. Like, you guys need to, like, you know, send out an alert. You guys need to send me an alert when you guys are taking those trades. So you see that the group is taking sort of trades that are like, you know, sort of the group oriented, right? And that's beautiful to see these guys, right? But you got to start. All right. Jay trades in the chat. Okay, I know. Okay, I know who you are now. I just don't remember the handles too well. Literally, my head is just made up of YouTube handles and Zoom. It's, you know, it's such a mess. Let's see. Paul, where the laptop's gone? I didn't get an option. Okay, so the laptops are there, Paul. Send me an email. If you did sign up Friday, I don't know if we're going to have more later today. If you see a laptop in the checkout, that means we do have them still. Lucas, not right now, but we are pushing out some even more intense push notifications for the chat room within the next couple of months, right? So luckily, you know, we're getting some help, right? So J Trades, that was a pretty insane stuff, man. So what are you guys going to do for NVIDIA? That's going to be interesting. You're welcome for the laptop, man. But I do like really that community where, you know, and look, I've literally, I started this chat room with Matt. There was nobody in there. It's just me and Matt. We started from like 0, and then now we have like about over 100 members there, amazing people. Everybody's so like into it, and it's a great team. I'm telling you. I mean, look, you're seeing it from J Trades, him and 6 other friends in the chat room that they, you know, they're there in the chat room actively, right? Made a nice YOLO trade there with Target at 2 nice YOLO trades. But man, that Target one, and I don't know what's going to happen with NVIDIA. Who knows? Donna says, can't wait to start working with your group. It's going to be nice. Yeah. Yeah. I believe I sent you a quick email there, Donna. Keep in mind, guys, just being realistic here with you guys. It's Sunday. We're closed. I'm the only one here. So just, you know, but I'm going to answer emails for sure. And, you know, we're maybe call some of you guys if there's time, but I wouldn't look, this thing expires at midnight. Okay. So if there's anything, you have a 7-day money back guarantee, and we can talk Monday, Tuesday. Focus on getting on the chat room. Again, if you can, I'll help you. But just focus on getting in the trades there for Matt. PE, can I join Monday or Tuesday at this price? No, I don't think so. It's going to be like 2,500 on Monday. So this is just this. So, all right, just so you guys know, like, we did this discount just because we know that, you know, things have been tough on a couple traders out there in the markets. But I'm telling you, come into our chat room. It's not going to, I mean, it's just a different, it's just different. We're just doing, like, I mean, look at what J Trades is talking about. That's crazy that we can do that sort of stuff as a group, as a community, and on top of that, have Matt's trades. So imagine you're making money on Matt's trades. We're not even calculating Matt's percentage gains on like this stuff on what J Trades made, that 6,000% target put, you know, but that's part of the group, part of the team, the community, right? And of course, Matt talks to them about it. They're you know, they do all that stuff. So Donna, I'm pretty excited you're joining the group. We do have another new member here that we do have to give a welcome. So go ahead in the chat, be welcoming to this person. We have TRXU. Welcome TRXU to the family. Let's go. All right. Okay. Oh wait. Okay. Regina Arjun. How do we log into the chat? Once you is that Roy? I think it's you, Roy. Once you log in, once you sign up, you're gonna get a welcome email. If you don't see it, make sure to check your junk and spam. 99% of the time it's there. If for any reason you don't see it there, send me an email. I can send you the link myself. The chat room is open. It is working. I'm literally in it right now, as you can see. So it's really easy to navigate as well, right? So let me just post the links here though, because I'm getting a lot of emails and calls from you guys. So I do have to put some time aside for that. But just go ahead and sign up, give it a shot, 7 days. If you don't like it, you get all your money back. All you have to do is email me, let me know. I'll send you, to the customer care team. They'll take care of all that stuff for you. And, it's that simple, right? 7 days. I think the next 7 days are going to be pretty volatile. You have a risk-free option here to trade with Matt Maley, a 40-year Wall Street veteran. I mean, if you want to let that slide, that's up to you. But I mean, he showed you all the trades, right? And you have members like J Trades telling you what they're doing in the chat room. So there's only so much I can do. There's only so much, even the members, just consider the fact that like our actual members are here posting like their gains. Just consider that, right? That they're here watching Matt because they want to hear about him and literally telling you, dude, I'm making money on this chat. So, and that we're giving you a 7-day money back guarantee. So, I mean, go ahead, give it a shot. Look, times are tough, but it doesn't have to be that way, right? You can make money, and even though things are bad in the economy, with this particular trading chat room. So thanks a lot, guys, for being here. I don't think there's any more questions here. Doggy J Trade says his portfolio is up 1,200%. Gotta go. All right, my friend. See you in the chat room, man. I love hearing that. Congratulations on those gains, brother. And I hope to keep seeing you in the chat room, man. It's a beautiful community. Thanks for being part of it and making it so great, right? It's amazing the people that we have there. Once you go in there, you're going to get to meet them. It's really my favorite thing to do, to just, hang out with the members, right? I know them, we know each other, we trade together, like as far as like Matt and all that stuff. And we're all just there learning from Matt. Literally, I'm there learning from Matt, taking his trades too and stuff like that. Christ the Fitness Tuesday meeting with Matt. Yes, sir. Tuesday meeting 11th. Yo, that was the wrong air horn that I clicked. But the meeting is on it's on Tuesdays, 11:30 a.m. Eastern, Mr. Christ the Fitness. So, and you're gonna get an email for that. And if for any reason you don't find the link, just post in the chat room. Hey, does anybody have the link? It will be there. Someone will answer you, right? It's like I said, everybody helps each other. So I don't think there's any more questions. Let me just check everything here. PE, you have 7 days to get all your money back. So there's no pressure, my friend. Let's see. What's up, PTI? Born to be Free's in the house. Yo, we got Born to be Free in the house. Where you been, man? People told me you were stuck in Vegas, partying there. All right, guys. So PE, good question. I mean, Matt focuses more on buying calls and buying puts. So it's really more like the volatile side of things. It's not spreads. It's not that sort of stuff. We're talking about specifically trading the volatility, right? P Murray asking how to join the chat room. I'm going to post the link there for you, man, one more time. It's going to expire at midnight. So please, again, keep in mind, my hands are tied here. Okay. I can't go against, everybody here. So I did my best to even get you this deal and bring Matt here for 2 hours. So P Murray, you're asking how to join the chat room. So the link is there in the chat. Good to hear you did well, Born to be Free. Love that, man. Let's give Born to be Free a good shout out, man. Born to be Free is the most loyal Benzinga member here. I'll tell you that, man. This guy, and that's the thing. Like I know a lot of people here that like really are so into it and do so well with the chat room. And really, that's why I want all you guys to connect, right? All you guys to kind of like trade together, right? If that makes sense. Get all you guys in chat room, sharing ideas, trade ideas. There's absolutely zero chance that you do this for a year and come out confused. I promise you that. So, all right, I think we covered everything there. The questions, all that stuff. I'm going to put the contact in the chat if you want to call or email. And keep in mind, this is until midnight. If you see a checkout, if you see a laptop in the checkout, that means that we still have laptops left. But this will expire at midnight, the 70% off. Again, I encourage you to try it, 7-day money back guarantee, and trade with Matt for these 7 days. See if you like it, see what happens. If you make a couple $1,000s, then you got your answer, right? So again, and also Matt is also big on risk management. So he'll give you entries, exits whenever he's trimming or adding. So it's very detailed to the point where that's how Matt's going to give you that sort of stuff, right? I'm taking a little position, I'm adding a little bit more, I'm adding a little bit more, I'm selling for profit, and I'm shorting now. So if you do want to keep up to that with that trading activity, you're going to love this sort of stuff. Let's see. All right. Yeah, no, Born to Be Free. Appreciate the love, man. Good stuff. PE, go ahead, man. Definitely. I mean, there's a lot of great members out there like Born to Be Free. I think you've talked to a lot of them already. Cypher's in the house. The whole gang is here today. So good stuff. Good stuff. All right. All right. Yeah. So again, guys, thanks a lot for being here. I want to give everybody a special shout out, making sure that you're here on a Sunday. It's a great Sunday. Look, there's still some light out in the day. You can still do stuff. But more importantly, focus on your, on your trading stuff, right? If you have time, give this chat room a shot, right? Get into it, meet the community, meet the great traders we have there, like Born to Be Free or Cypher, Paul Green. I know so many people there that are banking on the chat. And many of them bank and don't say anything, obviously. But just want to give a shout out here for everybody. So have a great day, everybody. Stay safe. Have a good weekend. Trade safely and responsibly, right? And give this a chance. I promise you, it's going to open your eyes, especially if you're new. This is where you want to start when it comes to trading options, if you do want to get the sort of gains that you've been looking around with Matt. All right, guys. Thanks a lot. Stay safe. We'll see you next time.
Thank